Okay, so Prashant's already laid the framework for the election thing. So what I'm thinking is that the best thing to do is to really look at the markets from a longer term perspective, something that we rarely end up doing in the LFTs or anything else. So we already have a view on what the markets could do in terms of the election itself. And beyond the election, we're talking about a 15% move from the peak. Of course, that becomes a retrospective label whenever the peak is. So you know that when the market's fallen, let's say, according to my understanding, 5 or 10%, then you know the peak has been there. Wait for another 5% fall and then maybe start buying as a proactive measure. So the question is from a longer term perspective, and as you already saw in the election, post-election, 1 year post-election presentation that Prashant did, there were a number of years when you did, 100%, 1 year after the election results. So of course we don't know what will happen on the 16th, so we'll just have to wait for the 16th. But looking from a longer term perspective, what could be our investment outlook? What could be the sectors that do well, which could perform better versus the other? Is the sort of discussion that I think would be fruitful to have. Okay, so what I'm going to do is mostly look at the charts now from a weekly and a monthly perspective rather than from a daily perspective, which we normally do. But before that, what I want to do also is get into the fundamentals of the particular sectors, so that we have a fundamental perspective of how each of the sectors are. So I asked Siddharth to do this, and he's created the histograms for the various, all the PE ratios of all the sectors. So my thanks to Siddharth for sending me this. This is so what I want to do first is do the fundamental valuations, but as Prashant has already said and has shown and demonstrated. So we are at the average mean valuation for the Nifty. Nothing great, nothing expensive, nothing cheap. If we had looked at these valuations or these histograms, let's say 3 months, 4 months, 6 months back, we would have probably found them to be at attractive buy proposition. But they are not. I did a quick review, so just giving you an overall perspective. So this is data updated till yesterday, and there are multiple histograms that are there. I've just selected the ones from 2003 onwards, because otherwise on the distribution you get some skews and all because of the dot-com boom, dot-com bust, etc. So and because of the scaling, then they become a little difficult to read. So first and foremost, what is this histogram and what does it depict? So as some of you already probably know, who have done some basic statistics. So when you distribute data, you have in the x-axis the actual PE ratio, and on the y-axis you have the frequency. That means how often does that value come to that edge. Okay. So for example here, so this is not on a chart, so I don't have the scaling here. So on this, which is at around, I would say 18, the PE ratio of the Nifty tends to be at 18 very, 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 very often. Okay? And that makes sense. Of course, after you're talking about the average. If you look on the other extreme, which is like here, 28, 29, the PE ratio comes there very, very rarely. So it comes there once in a few years, and as Prashant already said, 2 standard deviations away, that's where you are. So while he talked about it from the perspective of standard deviations, we are here talking about it from the perspective of time. So how frequently does it go there? Now for me, the way I relate to this is that much more than the frequency distribution is what the window of opportunity that you have to actually get in or get out of that position when that position happens. So if let's say the Nifty PE, this blue line was right here on this right vertical, there out of the total distribution it stays there very, very little period of time. So you can't say I will come back and have a look at it after a few months. By the time it will have moved significantly and your window of opportunity is over. So if you're going to use this as a way to track the market or even use it as a timing mechanism, I would say, to get in and get out of the market, it's something that you have to follow up on a regular basis. So just now when I was talking to Siddharth, I was just doing a quick review and I said, nothing is really cheap. And I said, yeah, nothing to buy. But that's why then he said, yeah, it was like that a few months back. So I asked him, was he looking at it daily? He said, no, I was not looking at it daily. So while he created it, what's the point? You have to make money out of it also, no? So please start doing something about that. Okay? All right. So you had buying opportunities a few months back. That was around 5,500, and like already Prashant said, and the reason fundamental analysis people like is have certain flavor. You can get a story out of it. You can find out why apparently a stock is doing well. So in a sense, we're looking at the story here. So this is the Nifty PE, and what I will do is sequentially go through all the other sectors, and then there are some broad indices, and also if we have time, we will do that also. So where is the Nifty PE in terms of distribution? It's right in the bang in the center. Anything moving this side or that side is really not going to make any difference to us. So really, is there any opportunity here? Is there any favorable risk reward for us here? I don't think so. However, let's say maybe I think, like I said a few months back, I would suspect that the PE ratio was somewhere in this zone. Okay, when it came to that -1 standard deviation. And if you look at this, you have a very small bar here. So this is not distributed equally. If the blue line was on this vertical, then you had a window of opportunity which was, I don't know. So this is maybe some extra work that we need to follow up on in terms of when you say 50, how much time are we talking about actually in terms of days or weeks or whatever. But whatever. Huh? This is daily. This is daily piece. But this is, we don't know the total. 2003 is about 11 years. So out of 11 years, 50 days. Not about 200. About 2,000. About 50 out of 2,200. So what's a quick divisor? Just do 50 divided by say 2,200 or 2,300. Yeah. Yeah, but then it's not distributed across 11 years. So when it comes there, it's not like it's staying there for 2.5 months. It totally just stays there for 2.5 months. So you have actually very little time to actually act on it at that particular time. So when you go back to it, maybe earlier I would have said this is something you can look at once a month. I think you should look at it every week now. Because if it's staying there at that buy opportunity or sell opportunity for a very short period of time, what you're looking at here is cumulative. Okay, so there's a lot of layers of work that we can do on this. Anyhow, so the Nifty P is unfortunately not in any position for us to do a buy or a sell or a short. The Nifty Junior, surprisingly, is a little on the expensive side actually. Okay, so the mid caps have actually run up, and the Nifty versus the Nifty Junior, if you look at it, the Nifty Junior is actually a little bit on the expensive side from a frequency distribution point of view. So could the Nifty Junior, fundamentally speaking, run up a lot more? Probably the Nifty could do that, not the Nifty Junior. If anybody has a different point of view, please voice it and let's have a discussion. Let's forget about the Sharia index. Relatively speaking. So here's the thing. The purpose of doing this whole thing together is because what we want to do in the discussion is figure out which sector or which area is a better risk reward. So if I were to say now compare Nifty versus Nifty Junior, the Nifty seems to have a better risk reward than the Nifty Junior, which does not mean true. Sure. Sure. Okay, so this is not a question of something is bad or something is good. This is just a question of how is one relative to another one. The pharma is clearly expensive. There is absolutely no doubt about it. So the farmers had a fantastic run last 3-4 years, but seem to be now clearly on the expensive side. Having said that, those bars are pretty high. Okay, please notice that the bars are pretty high. Unlike the Nifty or the Nifty Junior, where it tapered down on the side, pharma tends to stay expensive for quite some time. So even though it's expensive, it can remain expensive. Please remember that. Okay. So from a so can it become more expensive and stay more expensive for some more time? Yes, of course it can. Okay. But if you look at it from a risk-reward perspective, is it an attractive buy right now? Probably not. Okay. The public sector enterprises. This is a whole wide array of public sector enterprises. Prashant already mentioned that in the banking side, the public sector banks could be potential buys for the long term. And of course, the banks are part of this, but so are things like BML, BHEL, and Power Finance Corporation, and also all the public sector enterprises are here, and they're clearly on the cheap side. The sad part of the story is they stay cheap for a long time. It's the highest bar. So the valuation in terms of the public sector enterprises, they are cheap, but they stay cheap. You know, this whole thing that you keep hearing in the media, buy cheap and sell expensive. What you do with this? It stays cheap only. So how long should I keep holding it? But it does go up. So if I look at it from a simply valuation perspective, it is less than 10 right now. It's in single digits. And if I go to the other side, it could easily double to 18, which means, you know, let us assume growth is there, which of course it is there. And across the entire public sector enterprises, the whole, all the PSCs are net making better earnings. This is a sector that could actually do well in the coming months and years, not only on account of earnings, but also on a re-rating of the entire sector. It's no wonder that if you actually look at this, that new ETF that got launched, Central Public Sector Enterprises ETF, it has already run up some 18 or 20%. So at the time it was launched, those PSCs were somewhere here at an extremely attractive valuation, and they could still run up. So your headache today is solved, which is what in PSC would I buy? That ETF itself is there, the PSC ETF. So I think that is something that should be marked as a potential buy, especially if the markets were to, you know, correct. And even if they were not to correct, at least on what we have seen so far, it looks like a potential buy. The only thing you have to be very clear about is after you buy, you may have to wait a pretty long while before it actually gives you any results. So patience is something that you're going to really have with this sector. Okay, so the PSU bank. So please notice that the PSU bank and the PSC enterprises are actually two different things. Okay, the PSC has all the things: bank, capital goods, transportation, anything that is, you know, basically Government of India owned. This, on the other hand, is only public sector banks. So valuation-wise, actually a little bit on the expensive side, historically speaking. A discount to private sector banks is always significantly there. But as of now, they seem to be on the expensive side, especially after that. I think if we had seen this about 3-4 months back, you know, a lot of the PSU banks have gone up 50%. If we had done that maybe just 2 months back, this line would have somewhere been here, is what I'm guessing.
But that the new banking license will also shape up the existing PSU in terms of
it's just 2 banks, and then it's 2 banks and 1.5 years to get the thing in place, and then, yeah, if my view is that let's say 20 banking licenses have been given out, then I think there was something to worry about in terms of the existing banks. Would they take away market share or not? But you have only 2. One is a very regional thing, Bandhan in, I think, West Bengal. IDFC yes, has a potential, but how much will it pull away? I don't think so. I don't think. I think it's been a, you know. I don't know about overpublicized, but it has probably it has been a damn squib basically at the end of the day. So valuations per se, would PSU banks be a buy right now? Does not look like from a strictly valuations point of view. However, on a technical view, I think most of the banks are looking quite strong. So please be clear about this, that each one of you has to interpret this for your own particular circumstances and how you want to go forward. Are you a short-term trader, few days, few weeks, or are you a long-term investor looking to build a portfolio over several months or several years? So be clear that there context to any discussion. Realty, okay. So surprising that it's on the expensive side, and this is more so in spite of the prices themselves having fallen so much. The realty index is not far from its lows, and in spite of that, realty is still expensive. Shows you how much earnings have actually deteriorated over the last several years, and for earnings to grow back is not going to be easy. You're not going to see. When I see this picture, I don't see a re-rating of reality happening very, very quickly. Since for some of us, we've been discussing in the mentorship program, the trading room, we're looking at DLF, etc. So here is one input on that issue, that DLF is also expensive in spite of its low price. So fundamentally, can it get lower? Yes, it can get lower. So having said that, please note that on the expensive side, the bars get very, very low. So could reality stay this high for too long? Probably not. So either earnings have to pick up, or anticipated earnings have to pick up on reality soon. And if what Prashant says, I hope happens, which is that interest rates drop and all, then you could see that happening in 1 or 2 quarters itself if interest rates come down, and or the demand supply gap has to get filled. So like he said, DLF and many other companies sit on a huge land bank. You can't sell that. The only way to do it is see if demand can pick up. If interest rates fall, then demand could pick up, and then you could see some sort of stability there. So from a long-term perspective, so this is very interesting. As you will see after I finish this, the reality index has come out of a multi-year downtrend. But on a fundamental basis, the reality place is still expensive. So markets are known to discount the future by 6 months to 9 months. So this is an open question. If anybody has any inputs, great to hear. This is from 2003. 2000. Yeah, okay, for the index. Okay. So the question is the market aware of some recovery of that sector which we are not yet seeing on the fundamental side? It's a well-known thing that the prices tend to react before you see evidence on the fundamentals. So what will be very interesting is to look at the next 1 or 2 quarter results and see how this whole thing moves in terms of the PE ratios, the valuations, and the EPS. Okay, service sector index, really nothing much to say. It's again a broad index right in the middle. Let's move on. Okay, this is amazing. So small cap is somewhere to the extreme. I don't think any of us are trading or investing in small cap, so I won't spend time on this. The LICS is too recent, so not really useful. It's a new index for 15 stocks that the NSE created, basically to try and improve liquidity of these 15 stocks in the FNO space, which I don't know if that happened or not. Okay. But again, if I were to look at it from the LICS perspective, somewhere in the middle, very, start date is 2009. Interesting that it has 2 separate distributions, and it's right in the middle of it. I don't know whether it's going this side or that side. Very rare to see data, spaced out like this for a continuous series. But anyhow, okay. So this is definitely interesting. So mid cap 50 versus the Nifty Junior. Okay. So just keep this on your mind. I can't it will be tough to show you both together with this. So the mid cap 50 is a discrete set of stocks from the Nifty Junior stocks. Okay, but more or less both of them belong to the mid cap space. So if I had to now choose as in a sector to buy, then from a valuation perspective, the mid cap 50 definitely looks pretty good. It's on the left edge. It probably, if it falls, so if I were to look at it, it's what's the value now? It's 13. It could maybe fall to 10. So that's a fall of 3 points. But on the other hand, if I even go to this side, so this is about 17 or something. That's about 4 or 5 points and all. So it has a much bigger header room to go up. So I'm just going to go back to the Nifty Junior. So just keep this picture in your mind. Okay. So yeah. So look at this, right? Which is on the right side of the edge. And look at this. So interesting that even in the mid-cap space, you have some mid-cap stocks that seem to have performed well, and some which have not really performed well at all. Okay. Let's share. Okay. So from the ones we have discussed, the public sector enterprises seem to be attractively valued, and the mid-cap 50 stocks seem to be attractively valued, unlike the Nifty Junior stocks. The problem, of course, is that you don't have a mid-cap 50 ETF. So then you'll have to go down and break your head and figure out which ones you want to look at within that group. Okay, so CNX 100 equal weight is somewhere on the very expensive side. And yeah, it's not a sector. The CNX 100. So whether it's a narrow market, the Nifty, or whether it's a broad market like the CNX 100, all of them are pretty, good valuation, including the CNX 200, and then the CNX 500, a little actually on the expensive side. So the broader the market you're seeing, it's interesting that even at what is attractive valuation on the Nifty itself, is turning out to be an expensive valuation on the broad market. I'm not sure how to explain this, but definitely in terms of a sustained up move, I think a sustained up move has a limited life now. If you want the keyword being sustainable, can the Nifty itself go up another several hundred points? Yes, it looks like. Can it be sustainably staying up there? I don't think it's possible, given that you already have the broad market, which is expensive. Please note that if the broad market becomes expensive by about another 20%, okay, so it's going to come to 20 plus and to stay there for very, very little period of time. And it's exactly the broad market which could drive the markets down. So here's the thought. I'm just speaking as my thoughts are occurring. The signs of weakness in the market might actually be first seen in the CNX 500 rather than in the Nifty itself. So I think that will be something really useful to track, to look for divergences between the broad market and the narrow market. These are created by data. These are not off the web. Alright. The auto. So, we all know Mahindra hitting life high, Tata Motors hitting life high, left, right and center, all the auto stocks doing damn good. But. I know.
No, actually, true. And Tata Motors is the major on all.
The highest pay.
Yeah, and if you take it consolidated under, it comes just where I can do
yeah, but how much will it shift back into the left?
Plus, now income is not
Agree. So are we then saying that this could shift to less than 20? Sangyong. Agree. I mean, there are these very.
No, I have calculated, but I believe, I mean, I myself was speaking that same on same line. What is the auto going up, obviously has point in India. I mean,
That's true. 75% of the profits for Tata Motors come from JLR. So it's not something that was very well known even 6 months back, but then people have gotten accustomed to it. People hunting for reasons. Why are car sales dropping in India for 2 years in a row, and its stocks are really going up, and then you find something that makes sense. Then it becomes the news. So now people are getting accustomed to it. So one of the two things will happen, as is my personal opinion, that they will have to revise, this, because this becomes erroneous data. Because it's not even looking at, it's one thing when you're looking at 80% and ignoring 20%. It's another thing when you're looking at 20% and ignoring 80%. So if this is going to get substantially moved down to, let's say, 20 minus 2 or 15 even, if you do consolidated data, then the story is very, 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 very different. But on the other hand, if it is, how you put this? If you can think of a scenario where JLR sales would fall, it could happen. Then this could very quickly become a very, very expensive stock, including the entire index altogether. So while this is not truly representative, first of all, because of the methodology, two, because things like two-wheelers are very separate from four-wheelers, it's not really representative. But then it's something to just keep in mind that this is, according to the methodology, an expensive sector. So you can track it technically, and if you were to simply put these two together, at the earliest sign of a technical trend break of an uptrend, you might as well get out of the sector rather than staying on risk.
So I didn't understand. This is not a standalone earnings or this is on the consolidated?
This is on standalone earnings.
So that denominator is a different price is based on the potential of the
Price is the price right now.
Right.
The earnings is the basically, you're taking only standalone earnings, not the consolidated earnings. You're taking only India earnings.
So
You're not taking,
are not
they're not accounted for. So if you had put the Jaguar earnings in the denominator, then the ratio would be much lower.
but they are fully subsidiary of India.
Yeah, but then, what do you mean by where are they going?
Tata Motors.
Ah.
It has got a Jaguar in it.
Yes.
And then the sales is going up and then the margins.
Yeah.
So that must be getting reflected in the P&L of Tata Motors.
On a consolidated basis.
Right.
But if you take standalone, then you're looking at only India operations.
Okay. So the financial results, whatever they announced, they have done.
It will be both. No, both will be there. But what is NSE using is only the standalone results.
So then the LSE have to change their
It's good if they do. Good if they do. It's more representative of the actual total capital is deployed towards. So that matter, Tata Motors should, Tata Steel should also include Chorus. Standalone does not. Consolidated does.
So the capital, whatever is there, that also has to get reflected in the capital.
Okay.
That's not getting
True. So what you're seeing is part of the story, not the whole story.
So the auto index is based on Tata Motors, Mahindra and all, or is it just Tata only?
No.
All autos.
Yeah.
But is it a good time to sell now if you already have a holdings of auto?
See, this is the problem, because the methodology is flawed. If I knew that this methodology is something that I agree with, then would this be a sell? Yes, this definitely would be a sell. Okay. So that's what I'm saying, that instead of, so keep this at the back of the mind, but basically look at the stock and look at the trend, and then if you're looking at a longer term trend because you want to match it with fundamentals, the moment your longer term trend is gone, get out of it. Okay, so all the banks fairly valued, could go up, could go down, but again, as they go up, notice how the right side tapers off much faster than the left side. So you're already seeing the bank nifty at its, almost at its life high again. Okay, and it's like a nice triple top, I think, or whatever. So it could break out, but as it breaks out and becomes more and more expensive, then you're going to again have this issue of when does the drop inevitably come. Okay, so this is one thing which is definitely looking cheap. So the public sector enterprises was one thing, and the commodities was the other thing, and mid cap 50 were the three sectors which are definitely looking cheap. Notice that all these become cheaper if the drop comes. So in terms of a risk profile, those will become even more attractive.
What are companies coming to commodities?
You can go to the NSE and you get the list. No, that's a separate index. Consumption is a separate index. Commodities is a separate index. So here's consumption, which is on the other extreme. The consumption is totally whacked. Again, interesting because you're looking basically at domestic consumption stories within India. So I'm wondering something worth pursuing. So you have what is called, Sanjay Prashant already mentioned, sector rotation, and then you have cyclical economic growth. If the Indian economy starts to come out of a slow growth period into a higher growth period, then commodity use, because commodities go into raw materials of factories, finally into finished product. Consumption is the finished product.
I'm not really sure. Not very sure.
In the commodities, possible.
So that's there. In other offers, that's what nobody seems losing big money.
Who?
Nobody seems loss making.
Who's loss making?
Nobody.
Okay. No.
That's actually, I don't know. That's not the reason of that.
Okay.
In that, underlying people have been concerned with which.
Okay.
So that's true. You actually be looking at much
Higher.
Sure.
All right. Okay. Right. And then I think more or less, given that they all the major big ones, the weightages would more or less be the same. Yeah. So net, I mean, so apart from 1 or 2 years which have issues with their subsidiary consolidated results, I think mostly otherwise, sector-wise, it's clearly on the cheap side. Consumption is clearly expensive. Dividend opportunities, which is okay, again, companies which are sort of imports, cash rich and paying good dividends, could go up. Okay, if it goes down, you don't have much time to buy on this. But if it goes up, it could stay up for a decent amount of time. Incidentally, okay, because you're looking now across themes and sectors. Okay, I hope you get this. Sectors are industry types: cement, autos, steel, whatever. Themes are consumption. So you consume from paint, chocolates to shampoos to media to entertainment. It's all consumption. So it's a whole. You consume different sectors. Commodities is from energy to steel to raw materials, iron ore, and stuff like that. One of the things to do is, like, for example, you have the mid cap 50, which is cheap, and you also have commodities or commodities which is cheap. Is there something which lies in both? Are you with me? Is there a stock which lies in both? Because there are two places where it is appearing cheap from slightly different perspectives.
Really, just thinking about it. I really about how we are doing. 40.
No, I agree.
You have taken for some people to create the starting point. You have taken somewhere to 7 starting point and given 7, this is 7 point.
Sure.
It means that you are looking at multiple different periods of time in the market.
Okay.
I mean, the index that is PSU bank index you have taken 2007. It means that most of the data points have been in the bear market, that is in the bull market.
Sure.
This has been more in the bull market. I mean, may not be cheap or may not be expensive. Look at it in
And
the
the entire data.
The bars look bigger, but the bars are just 20 bars.
Correct.
They are the 200 bars. I mean, huge tendency are number of days that can be made.
Agreed. So everybody got the point that you mentioned? Okay. So energy, again, short-term data, not there for too long, on the cheaper side. Could be, I mean, a lot of fundamental reasons. Energy basically has all your oil marketing companies. So your subsidy, your rupee, this thing, all those will become active. So if, let's say, as the story goes, Modi comes to power and the rupee goes to, $50 or something, definitely good for all of them. Subsidies will become managed, your petrol might become cheaper, should become cheaper actually. Good. Finance has a lot of these other non-bank companies, so your NBFCs, non-banking finance companies, so things like LIC Housing Finance, Shriram Transport, etc. But again, this is only from 2006, but that's good enough. You have a bull market and you have a bear market within this index. So that's looking a bit on the cheaper side. Okay, so FMCG, unfortunately, this is only from 2011. So this is only for 2 or 3 years. 35, definitely on the expensive side. Okay, forget about this. Okay, infrastructure. So this is from 2006, again, good enough, definitely on the cheaper side. So, which was that sector? Realty was expensive, infrastructure is not. So you have to distinguish that they are not the same thing. So I think there are 1 or 2 stocks which overlap both, if I am not wrong. They are both in the infrastructure index and in the realty index. Remove the realty index stocks and just purely look at the infrastructure stocks. I think you've got a pretty good sector to watch for. Again, if you look at the multi-year downtrend line on the infrastructure index, that has been broken out of. IT, good, not bad. Could, so, if you look at this, could IT go down?
No, because there are still some long bars. Even if it might go down, you have to go down in a time phase manner because there are longer bars. It means that it will take time. It is taking some time.
So overall, a couple of things. IT itself, and this is from 2003, okay, is not expensive. So the question that some of you have, what should I do with my IT stock? 1999 data. TCS and Wipro.
Correct. So, I mean, this cheapness is for the TCS Wipro Infosys Infosys speaking. Because Infosys hasn't moved for 2 years now. I mean, I had a share card account which I told you recently. I haven't get it there for so long. I'm still yet to get it closer because they said I want to have something for new. I mean, do everything new because I want to just get a share card. I will investigate Infosys and TCS. Infosys are a bit old. You can feel it. TCS are not very good. So in that sense, because 55% of the rate is Infosys. Though cheap, I mean, the problem when you are doing this is that what the profit of Infosys going 3% more than it. I mean, that's Infosys, unless Infosys goes 3%, it doesn't matter whether Wipro goes 30%. Still, IT index will be cheaper because Infosys is the largest in the rate. They are cheap because of profit of making it becoming smaller is power.
True. So as we said in the the session that we've had, if you have an ETF for that sector, your life is easy. You just go by the ETF and then you're set. Most of the sectors will not have an ETF. Okay, so what's your way to deal with that sector and if you want to invest in it? Which stocks? You know, so exactly what you said, just to look at the top three because those will give you the, that's why this is what it is. So not only in terms of, liquidity is of course for small people like us, I don't think a big issue because we're going to buy anyhow, so few stocks. But in terms of just narrowing it down to which stocks should you buy and which should you sell, just look at the top three weights, whatever constitute the top 50% weightage, those are the ones and forget about the rest.
Top three in terms of weightage.
Yeah.
And one more thing to consider in IT is the earnings are higher. So the price was high, but now the earnings are less. Even if the price is high.
No, so I think from here on it's really a function of how the earnings grow. It's not really anything else.
Earnings growth are negative.
Earnings growth has reduced compared to the past.
But
But
in that effect, if we are trying
so we're not, I don't think we're drawing a conclusion which says go buy this stock. We're just looking at which sectors are the ones that we could focus on, the ones we could not. So all we are saying right now, because that was a question that was asked right in the morning, is how is IT looking? And IT is overall, especially if you look at the top three stocks, probably not looking bad at all. Could it go down? Yes, it could go down. It could stay down a little bit, by another 10-15% cheaper, and it could stay there for quite some time. But then on an expensiveness scale, it's hardly expensive. The thing is this, so if the rupee appreciates, would it go down? Yes, it would. Would it substantially go down? May not. Okay, especially if earnings just catch up with it, then it will become even more attractive to buy at lower levels.
So it's a next point. IT and pharma. We see pharma is on the higher side. If the rupee goes down, then pharma gets impacted more than IT, relatively.
But again, we have the issue of methodology. Okay, we have a lot of pharma companies.
Companies there larger set of.
Not only that, a lot of these export-oriented companies have subsidiaries abroad. So there's TCS, Wipro, and all of that, all including pharma. And again, then you have the standalone results or the consolidated results, all that drama there.
No, I mean, what we may look at PE, what we look at, I mean, the question is, or income which are 10 to
Yeah.
the question is, do you believe that companies will grow 10%? I mean, their EPS growth will be 10%. I mean, that's what market is pushing itself for. I mean, if you believe, idea to go, earnings have to go by 30%. That is not possible. I mean, is it in a reasonable point possible? Or infrastructure stocks. The only reason I believe infrastructure stocks can be more big if interest rates, I mean, if you know economic interest rates, if it falls, then infrastructure stocks are everything are not out there. Then what will not be much easier to achieve. Then yeah. Then right now, I think the case would be that whether the biggest can achieve 25% growth, going forward from here you believe that's possible? I mean, market constantly they are reevaluating itself. Okay, I mean, I don't think anyone is very super confused. Once we are getting market numbers around 50%, Infosys per 27.5%. All 9% and Lopana we are lowering our guidance, we can't grow at X%, we are growing at 6.6%. The point is that only if you can weigh yourself saying that, okay, I believe that from here I can grow at X%, and the market is valuing it at a growth of 5%. Then the arbitrage kicks in. Yes, to me, I mean, sorry, cheap doesn't mean good, expensive doesn't mean bad. I mean, I've been investing in a pharma fund. It's been expensive. It's just expensive. To take a company like Page Industries, it's for 4 years, giving me that model from $500 to $5,000. And a person who left it out because it's expensive. It's not looking at a salary. It's a 50 stock. Companies will get 50 times salary. I mean, the analysis goes up 50%. Which is why, more than 50 is not totally overpaying for everything. Infosys is that kind of it's overpaying because it's not going to get 20%, 40-20%. It's not going to get, I mean, a company that doesn't go into P ratio is actually not genuine. I mean, if they're not, I think Buddha has said this. Infosys was what, I mean, Infosys is not what after management to bank in India. But there was one time movement. After that, again movement. When you're thinking in terms of P, always whenever you underwrite also, you cannot get growth, also relationship with tax is concerned, forward growth.
So for those of you who have done the FA module, so what is he talking about?
The historical PE and the future
No. So the ratio we discussed there, right? P over Q. The PEG ratio. The P versus growth ratio. So you keep that into account, then what looks expensive on PE might be cheap, and what might be cheap on PE might be expensive on PEG. Okay. The PEG ratio. Okay, so this is what else? Okay, so media is not something that I really track, but clearly on the cheaper side, in spite of being at 33, but this from 2006. So this is good. Metals, right in the middle. So metals to be distinguished separately from commodities. Okay, commodities are more of what your raw materials for the metal space. These are like processing that raw material and then using it. I actually thought they were cheaper. It's interesting that it seems to be fairly valued in terms of historical perspective. Okay, so the overall mid-cap space. So you saw that dichotomy between the junior versus the mid-cap 50. The overall mid-cap space overall seems to be on the cheaper side. The MNC is definitely on the expensive side, but this is only from 2011, so not a very good distribution. Okay, so we are back to the Nifty. So essentially, which one was the cheap one? You have the mid-cap 50, you have the
BSC, Nifty mid-cap, BSC enterprise, commodities, energy, infrastructure, IT, metals.
Okay, right. So those are the ones, especially I would say, to keep in track. Why I'm focusing on that is mostly because when you talk about fundamentals, you're talking about a longer term nature of investing. Second is because of what was already discussed in the morning, that at some point you have to get that 15% drop which will come. And the question becomes, where do you want to invest? Of course, there are arguments both sides, and then when you get into the technicals, you can look at which is better. Do you want something which is already making life highs, or do you want something that is broken out of a multi-year downturn trend and then could probably be forming now secular long-term uptrend? So those are, I think, at the end, personal opinions on how you want to position your money. Or put some in this, put some in that. Any questions on this? Okay. So I want to move on to the individual sector indices from a technical perspective, and then look at all of them from a weekly or a monthly chart perspective rather than our regular daily perspective. Do you want to have tea now or later?
How long is each sector takes off?
We'll see. Alright, so please. This thing is still recording, no? During the break? How do you pause the recording? You can't pause the recording. No, then it will go to conversion.
No, but you stop it, it will continue the same.
What? No, this is about showing a screen. I'm talking about the whole session. Okay, go have tea.
What I'm saying is, you say stop recording,
Yeah.
then again say start recording. You record the same file. For the whole session, you will get one file.
You sure?
Yes.
Because, no, if it does something else, then you are. No, I can't start it again. All right, so you have the Nifty chart. This is a weekly chart. You put it any way you want, weekly, monthly, whatever. There's been a clear breakout of the life highs on good volume, and of late, whatever little correction has happened is now happening on low volumes. So if you look at it purely technically, at some point the market will have to come down to 6,350 odd levels. Just if no other reason, for a technical reason, to come and test that life high as a support and go up. Whether we break below that, that is a matter of time. But one thing that I'm pretty sure about, the 6,350 will definitely come on the market. That's definitely not our 15% correction. So if something like 6,800, 850 is our high, then it's got much lower to go. But for now, 6,350 is a reasonable level to expect to come in the next whenever few weeks or months. Calculate. So about 900 points, 1,000 points. So it has to go down to, yeah, about 5,200, yeah, something like that. We can probably take it to these lows somewhere here.
But it's not going on high volumes.
The breakout happened on high volume.
Breakout will happen on high volumes. But
Yeah.
stay there, it's still not on high volumes.
Yeah. Okay, so 5 is there somewhere there, so lots of technical stuff here. So in that zone, we have a top there, a top there, a bottom here, a bottom here, a top here. So that could be a nice fundamental support, some technical support, who knows. I don't know, what do people want? They want it to go down to 5,200, or you want it? It's clear. What about you guys? You have to be clear about it, okay? Because huh?
We want some move either up or down.
Some move will happen. Obviously, but what do you want is what I'm asking. What do you want to go up? It's always at a level you can enter, Girish. Any level you can enter. Really, how do you know what level? You have to have that, clarity about it. Okay? So, yeah. So if it falls to around those levels, so it's not only perhaps a fundamentally decent level to get in, but it's also probably a technical multi-year support that you have around that zone. So around the 5,000 to 5,200, 300 seems to be some really good support. And this is not going to change. I mean, this view of 5,000 to 5,200 as an excellent support will not change for several weeks going forward. All right. So that's on the Nifty itself. The question is, and I'm inviting opinions. So now that we have, broken this multi-year high, how far? Okay. And how did you get that number? So Prashant's view on the Nifty is that if it goes up 11,000. It will go, but when?
Not my number. There's a game called Krishna Kumar. He used to make for business. So, I mean, he is the parallel lines to get that it may go to dispute that, but from some other technical base, I can say number approximately. So, a round number, 11,000.
But by when? Around. Okay. So you have a view here. So 1.5 to 2 years from now, so you're talking about the end of 2016. You could very likely be at 11,000 on the Nifty. So if you could, Why 2018? See, I know that, but you have to remember that in 2006, sorry, 4, 5 and 6, I think, if I remember the dates right, the years right, you had in 1 year 26% growth in EPS, the next year you had 50% growth in EPS and 23% growth in EPS. It happened. And you're coming off from a low base. So you could certainly see something that happened. I also agree that 2 years is too early. You need some, startup time and rev up time and all. But why not? Why not? So anyhow, if it happens, then and it's a 28P, you know what to do also, right? So that's okay. See, I mean, this question, buy Nifty B, unless you put a time frame to it. You have 5-year time frame, sure, buy even now. Okay, I mean, if you have a 5-year time frame, why buy Nifty B? Go buy Nifty Future. You buy Future. Okay, what can we do? Just roll over. What? But no, you're borrowing money, na? Huh. After leverage and all, don't borrow money. If you can get more than 8% into 16%, good enough. That's my view. Yeah. I don't borrow money to trade. I don't advise anyone to borrow money to trade. So that's my opinion. All right. So you have a view, 11,000, 1.5 to 2 years from now. So on the other hand, I think the lower end is somewhere at around 5,200 worst case scenario as of now. So that's on the Nifty. So coming to the individual. You want the next week? You want? This is for about.
Most generation. You are.
I am still old. I told him right in the morning. I said old generation and all of that. This is new generation.
I asked for 2009. So then
I don't know about earlier. Okay. Go up. Okay. So if for all the short-term junkies and all of that, I don't know. Looks like we are going to come down to 65.50 or something like that on the Nifty. So things have picked up a little steam on the volume side on the way down. Clearly, you've got a very good hard stop at 68.50. Looks like, and you've got a nice sort of almost triple tweezers bottom at where it is now, right now at 66.50. If 66.50 breaks, and I think you're looking at least 65.70. That seems very, very likely. Actually, as a matter of fact, this is very interesting. For those, so what is this now? Yep. Yeah, it is a broadening formation. It is never a good sign. A broadening formation is never a good sign. That's what those theory says. Huh? No, you came for revision 3 days back. Very short. Huh? This is definitely not a bullish sign. If anything, this is a bearish sign. So for short-term folks, this is definitely not good news. As a matter of fact, if this persists, then you could have actually a fall in the works that is cooking. So broadening formations, or what are also called inverted triangles, are bad patterns. Okay, they are definitely not bullish. They tend to be pretty erratic, and when finally that support breaks down, you could have a significant down move that happens. There are no measuring implications. Remember that. But I think 65.50 is pretty easy, and then after that 63.50 or somewhere thereabouts should be your next target. So this is something that brings it back to its old life highs essentially. So from a short-term perspective, you have a clear broadening formation.
actually you have a ODA.
Yeah. So all said and done, you have nothing which is so this is the monthly chart. You don't have anything which is bullish anymore. So something to watch out for. And on that doji for the monthly chart, you can see the volumes have picked up. A lot of churning of the portfolio going around. No, actually, when Prashant was talking about elections and all, I had a question, which is, everybody saying pre-election, pre-election, pre-election. But if you look at the data that he presented, there were many rallies for the early elections also. And like he said, net, this was only that 1 month in Feb, I think, or March, when we had that thing. So my even fundamental question is, can we even call this a pre-election rally? Or is this a rally that would have happened anyhow, no matter what your circumstances were? So I'm not convinced that, to label it as a pre-election rally is psychologically very comforting, because you found a nice reason to ascribe a certain move, right? I'm questioning whether that's the reason at all, basically that. Technically, we would say just broke out of a life high and it went up, that's all. Why did it go up? I don't know. It went up. Was there technical reasons for it to go up? Yes, right? Because it booked a triple top, that too on a 5-year, 6-year chart, volumes were there, so it had to go up. So coming back to this, we had a doji. So at the very least, I don't think you're expecting any up moves from here on. As a matter of fact, you could actually be looking at a fall in the making. This could, of course, you get another thing on the right side, and it will become a head and shoulder top with a measuring implication of about 200 points. Okay. So you may have either a broadening formation on the Nifty and or head and shoulder which is not yet over. So the right shoulder is not yet done. Okay. So now coming to the individual sector indices. So this is the Bank Nifty on the monthly format. Does anyone have an opinion on whether this is an ascending triangle or not? Yes? No? Why yes? Why no? Anyone who says no? Yes, sir. Right, sir.
No, I don't know, but I'm very sure this is not a thing. I mean, lower trend line down.
Say again?
Lower trend line is not good enough.
Lower trend line is not good enough. Why not?
Nothing but this.
That's on the right side of side one. Okay. Anyone else?
Volumes are not optimal.
Okay. Okay. So that's right. Okay. So here's my simple take. Okay, you may or you may not agree that this is an ascending triangle. Okay, but at the very least, if you want to give it the benefit of doubt, that is a potential. Okay, the reason I would not be too happy with it is mostly on the volume side. I would prefer to see a very different volume picture, and that too over 3-4 years. Yeah, but markets have known to consolidate over 3-4 years, and triangles can be formations of consolidation also. So given that, what could the measuring implication be? So you know my approach, I prefer to be a little conservative on this. So if you look at that level, which is at about 12,900, and if you go down there, which is about 7,900, you're talking about how much? 5,000 points. So 5,000 points on 12,900. So about 40%, 35-40% on the upside. It won't happen in 1 day, 1 week, 1 month, but that is, so your target is what? About 18,000 on the Bank Nifty is a possibility. Now, all said and done, one thing that you have to keep in mind as far as the bank nifty is concerned. So, should a fall happen, then you could have strong support happening at around 11,000 on the bank nifty. So for those who are short-term junkies, so you probably have still a sort of uptrend channel which is under coming to support that, or it might have broken out. So that's the place to watch. And as far as levels are concerned, the short-term level is around 12,450, and then if it breaks down, it will be 12,000 about 300. As of now, I would think that the bias is more on the downside rather than on the upside, and that will probably be how it is, sideways to down till the election things settle down, or any move I think will happen only after the 12th and sort of the exit polls start coming out. Okay, so I'm going to take up some memory space. That was the bank nifty. No, first one was nifty. The broadening formation. Okay. Okay, so this is auto, and auto is actually showing some pretty good strength. So it made a new life high sometime late to 2012, came there quite a few times, and then stopped, climbed there, took support on it, and then has kept going up. And if you so the same broadening formation on the auto index also, and where could it come down to? It will come down to those around 12,800 levels, maybe even 12,500 levels, but there definitely seems to be a upper limit right now in the short term on the Nifty, on the BIC auto. Anybody knows what this pattern is? Something you've learned? Okay, anything else? There. Candlestick. It's called a tri-star. So please go have a look at your notes. Tri-stars are not, good omens. Tend to also suggest that downsides are highly possible. So at least after the tri-star, it has actually slipped a bit. It hasn't really fallen, but it has slipped a bit. But around 12,600, 700, you could see auto soon enough. Okay, forget the consumer durables. Capital goods. So this is one index which has stayed way below your 2007 peak. So it's still almost half of what the 2008 peak was. It's at 12,000 right now, and it's at 21,000 approximately was the peak. So long way off from the high. Definitely one of the sectors that has been severely broken down. But the really important part of this whole thing is this, which is, okay, so just let me make it long term. So even if I take the most extreme trend line on the capital goods space, it has clearly been broken out. And what's very nice about it is that it has been tested as a nice support. And what you all will also have, for those of you who have seen this or not seen this, is a textbook head and shoulder pattern. Okay, so the textbook head and shoulder, or head and shoulder bottom rather, a clear breakout, has gone up. Definitely not achieved its target for sure, and seems to have slowed down for now. The capital goods space, so both we didn't have okay, that I don't remember the T chart for it. So clear multi-year downtrend that has been broken out. If it's one sector that you should be looking at to potentially put your money in the days and weeks ahead, is definitely the capital goods stocks. So I would definitely strongly say that as and when a correction comes, this is one sector that should be right on top of your list for buying. Okay. FMCG. So remember, FMCG fundamental wise was expensive, and more or less for the last 1.5, almost 2 years, it's gone sideways. So from an uptrend, it has clearly become a sideways trend, and from a valuation perspective, also it is quite expensive. So not a sector you should really be in. Best to have your money out of it, especially if you are a longer term investor, because the sector itself is going nowhere, and keeping your money in a sideways sector is not really going to be good for your financial health. So take your money out if you are in FMCG. If it re-establishes an uptrend, you can always get it. But you know, we've already found the capital goods space where you could deploy your money into. Okay, so healthcare. So healthcare and though they're not really exactly the same, healthcare and pharma actually have a good overlap of stocks, and this is one place where you can see from a multi-year perspective, just one, fantastic straight line. So healthcare from a technical perspective, nice multi-year uptrend. Really no set to that uptrend right now, though except of course in the most recent thing you have not preferred to see a lower low. But that's okay. You keep getting these sort of consolidations once in a way that happen, and what you need to watch for is that high level. What's important to notice is healthcare had a correction earlier in March when the rest of the market was actually doing quite well. But the recent fall on the Nifty that has happened in the last 2-3 weeks, or you have that broadening formation, you don't see that here. It's actually been able to rally up. So some amount of resilience in the healthcare space. Good. So it's already in a strong multi-year uptrend, showing strength. Therefore, this whole theory about buy life highs because strength begets strength. So this is something else that you could keep on your watch list.
What are comments on IT? Basically, what about pharma? I mean, ability of pharma or reference of money is better than one. Secondly, pharma index is much better diversified than IT index. Also, IT, you have to differentiate between a product company and a service company. All companies are service companies, not product companies. Product companies have the ability to record reference of money, not service companies. You bring that margin, I mean, there is an appreciation of the pay. Your service, whatever your target at 30%, without getting enough support, you get 4% reduction. Labor cost is going up. Pharma has that option of expansion. I mean, you are the only cheaper manufacturer of any drug you can perform. Also, one of the reasons pharma is one of the sources because of pharma. That individual has taken up the index very strongly. Now, if you look at Ranvax, it has not gone anywhere now for the years. If you look at Cipla, it has not gone anywhere. If you look at it has gone up. I mean, they have pricing power. I mean, pharma, unfortunately, they have pricing power. Doesn't have FMCG doesn't have pricing power, which is why it's defensive, but not as very clever size of pharma. I mean, if you take a biscuit packet, I mean, in fact, 75% that it is 70% because of the also production power. Pharma can do even long border and 70%. These are, I mean, their expansions. I mean, margin doesn't happen regardless of bed for Indians, but for Africa, South America, I mean, they are really supplying the whole market for 55% drug. They are supplying for 6,000 or something of that sort. That 6,000 they are doing 100% margin. I mean, the margin is enormous for most manufacturing units of pharma industry. Not so far, if you have this thing, you put all your margin, not more.
So next is the metal index. So just to review, so the metal index on a fundamental basis decently valued, and on a technical basis. So again, this is one of those sectors which has actually come out of a multi-year downtrend. So whichever way I want to put at it, I keep to be 100% sure looking at these most extreme trend lines that can be put. So apart from capital goods, you've got metals which have actually come out of a multi-year downtrend. So potentially these are good places to be in when the next run-up comes. So you've already got a higher top, higher bottom formation. Okay, you need a confirmation which will most probably come. Except that, of course, they have recently slipped off sharply. As I think yesterday, day before, so Tata Steel and all was like 4, 5%, 6% down and that sort of stuff. Okay, but I would welcome any correction in capital goods and metals as an opportunity to actually enter at lower levels. So that's one place of, in my opinion, I'm focusing on places where things could be good for the next several months ahead. Okay. So this is the mid cap. So in spite of the nice run up on mid caps and stuff like that, still at a about 30-40% lower price compared to the 2010 high when it went there, not the 2000 and even below the 2008 high. So if you look at the 2008 high and now, still quite a big so that's at around 10,000, we are at around 7,000, about 30% less, coming out of maybe a 2-3 year correction, and that's what it's doing. Very, very good double bottoms at that price at around 5,200, and it has definitely broken out of that. Except that this is a pretty wide basket, you'll have to be pretty selective about it, but this is something that has done a technical breakout, could be on its way up. Okay. Alright, so BIC power, that's another I think this is not too long. Yeah, so this is only from 2011, so not 100% sure whether they were higher highs, but on whatever evidence that you have, if you look at it, again, that's been a breakout. And that's been probably the most recent breakout that you have of all the indices that are there. Too early to say, but you do have a higher bottom, higher top, and if you get a reversal at these points, those would be really, really good, strong technical supports on the power stocks. So the metal and the capital goods would have to correct a lot more before they will see support at lower levels. But the power is something that where support is available at pretty close levels. So especially for those of you who are looking at short-term trading, maybe in even the next 1 or 2 weeks, you could get power stocks at some good technical support. Okay, so this is the PSU index and the public sector enterprises basically. Again, there you saw that the PSE index was on the cheap side, and if you look here, so you very far from the 2008 peaks. It's what, less than 50% of that. So even if it has to go back with a 100% run up, that could happen. But again, worst case scenario, even then it could get, it's getting pretty close to that point. So I think at least from a tracking and educational perspective, This is something that you should watch out for on the weekly chart. That's where it is very, very close. You've gone to that resistance, sort of paused there for some time. You have a clear higher bottom, you've got a clear higher top. The real question is whether it can break out of that. If it can, PSUs. But again, the problem is that it's such a diversified set of companies, it's going to be difficult to get. So a PSU, let's say metal stock, or a PSU capital goods stock, because those are also sectors that have actually just broken out. So something that is already broken out, but this is the PSU space, is something that could be at the beginning of a bull trend. Okay? And you can check those out. Go and get the lists and then see what's common to both. Capital goods. I think you'll find BHEL there. PSU metal, you'll find sale. So this is reality, which has clearly not yet broken out. It's one of those, I think it's the only sector which is close to its life low. Of course, we don't have it before 2007, but if we just don't go by pure technicals, it is at its life low. So, and of course, DLF is a vast, chunk of this sector. You have, lots of support at that 1,100 or 1,200 plus minus 50 mark. Could come down with the sort of red candles like that you have. It's not something that you want to touch right now or even go close to. Let it settle down, form a nice base of support, and then reality could be a place to re-enter. Again, going back to and touching upon what was discussed in the morning, if interest rates come down, if GDP picks up, and a lot of those companies have high debt, if the debt sells off or if they clear their assets. So recently, I think yesterday or the day before, there was some news about DLF putting up about 1,000 crores. There are 2 malls in Delhi and creating sale sort of, not actually, it's not a sale. Yeah, so it's a commercial asset backed sale. They are basically securitizing the rental lease and picking up 1,000 crores upfront, and 1,000 crores will go up towards paying off the 17,000 crore debt or something like that. So let's see what happens on that. But reality had a life low. As long as it doesn't break that low levels, if you want to strictly go by technically, it's not a buy. You buy it only when the downtrend is broken. So it could keep going there and keep going down, keep going there and keep going down. So power is a buy, capital goods is a buy, what was the other one? Metals is a buy, and this one is still something that has to break out. Okay. So this is the CNX energy index, again not too long, but more or less been range bound for the last 3.5 years. And some of you have come for the LFQs before. I mentioned this. This what you see here in the oval, right there. This was Jan 2013. This is when the decontrol of fuel was announced, of the petrol decontrol, and at that time there was a 5 rupee hike on diesel, and there was also the 50 paisa that was announced at that time. And it was in response to that the entire sector, so basically your ONGC, HPCL, BPCL, all that really just shot up to the roof. And then of course it came back down, and then if you look at the technical stuff, came to that well-known multi-year support. Stood there for quite a long period of time within that zone. Inside of that, you definitely have another resistance zone here. And that has clearly broken out at that level again, and it has come back to a support there. So it has broken out, come to a support, and the question is whether it will take support here. For now, seems to be pretty okay. Could take support in this place. The diesel price hike 50 paisa has not happened for 1 month. I don't think it has happened yesterday also. Did it happen? I don't think so. So they have stopped the 50 paisa hike till the elections are over. I think now next month it will probably happen again. If it goes up by 1 or 2 rupees, then this is one sector that could really get re-rated once the subsidies go away. So I think that not only do you have a technical thing here to look at it, but if I remember right, on the energy side, yeah, it's on the little bit on the cheaper side too. So you've got both these things, contributing, or in my opinion, complementing each other. Okay. And the top pick in this is, of course, BPCL. Okay. IT. Okay. So what's very interesting about IT is that this is where your 1999 peak of IT was, and it has just come to that, and that index itself has made a new life high on your weekly chart. It's taken 14 years to get back to that level. Anything like this is hugely significant, technically speaking. So fundamentals totally apart. This is still now a sector that could actually give you something very surprising in the years ahead. You never know. It will do multiple tests, I believe, of that level. It's going to consolidate there, maybe run up there, whatever. But once it decides to break off from the life high, you could see this really, really transforming.
But it did break on a high volume.
Yeah, but this is not really sector volume, so.
Not the sector.
Okay, so clearly a breakout, no doubt about it. Whether that's a test of that old level and then it could go up or not, too early to say. Okay. But in terms of finding a sector that has created a new life high, many individual IT stocks have, if you discount the 1999 peaks, if you assume, not correct, but still, if you assume that the 1999 dot-com boom did not happen, then many made life highs in the last several quarters and last 2-3 years. The sector overall has now come back to its peak, and at least from a technical perspective, this is a significant achievement. So don't be surprised if in spite of all that we have said so far, IT could really surprise you on the upside. So going back to the question which was asked, what do you do with the IT stocks? Tough call, I think, because fundamentally they might be a challenge going forward with the rupee. But again, if this is something that I've said, I think almost 2 or 3 months back in the FNO class. IT is a space today where you should perhaps invest and not work in. Okay? Because why should you not work in? Because they're going to squeeze your life out of you. It's going to become very tough. The space itself is transforming. They're going to become much more ruthless in terms of efficiencies and productivity and stuff like that. That's one of the reasons I believe you're looking at exits in many of the top companies, especially Infosys. Okay, it's becoming far more result-oriented and far less, leeway for okay, fine, this, that, and all. If you're not up to the mark, please leave. Okay. So I personally feel there's a slow transformation going on in the IT space itself as an industry, and then you're going to see the next wave of whatever. So right now we've been, basically back office guys, BPO and doing servicing work and this, that sort of stuff. And slowly you will trend towards doing something at a level which is higher up in the value chain, that is very difficult to replace. So from an industry perspective, once that transition happens across the industry, across the whole set of companies, then you're going to, if you look at the worldwide composition of IT and where we are still at the bottom of that, that chain. We are nowhere near anything being product class, or very, very few products. Maybe you've got Pinnacle, maybe you've got iFlex, you've got maybe a few there, but that's it. There's really nothing else. But that, I believe, is transitioning. You're going to get package deals, infrastructure support deals, that sort of stuff. So it's no longer, body count and per hour billing. It's knowledge stuff. And once that happens, this is a place. So if you are a long-term investor, I would say you still should have IT in your portfolio.
None of the service companies which are there, they are into the product.
Who is that?
IT.
Uh-huh.
All the service companies are the ones which are giving the company
Okay. Okay.
None of them are actually
Product company. Sure. So you should maybe start looking. I'm sure there are some product companies. I don't know if they're listed, but yeah, OFS. Yeah, but that,
Operation is the one which runs the products. But as a financial services, we get a service. No, actually, if you look at make by take, all are getting listed in US, not in India. The product, I don't think we have listed in India. No, it is Indians are not. I mean, this is the ratings also. Ratings indication.
so I think that's it. I mean, of all the sectors. So what did we shortlist on? This is your Nifty Junior, sorry. Right. Okay. So that's where the Nifty Junior is, more or less a copy of your Nifty itself. So the Nifty Junior also creating life highs along with the Nifty. So overall, the overall market, of course, at its life highs, and there are these 3-4 important sectors: your infrastructure, capital goods, and power, and metals, which are either mostly broken out or breaking out of a multi-year downtrend. It is my belief that those are the 4 sectors where I think the concentration of the funds should be at this point. Okay. Especially if you're a follower of growth theory, of technical analysis and especially growth theory, then those are the sectors that could really, really start performing, no matter what the coming conditions are. Even if the market Nifties were to stay overall flat, these sectors will probably do well. And if the market recovers in terms of percentage returns, these sectors could actually give you much better moves. What I personally prefer is to look for, my preference is to strongly look for this word that I keep repeating in the class: sustainability. I want to put my money in a move where the move is sustainable and I can foresee for a decent period of time. And I think sustainable trends are in the 4 sectors that we have mentioned. Whatever. Yeah, energy also. Not power, interest. Yeah.
PSUs also.
PSU.
Yeah, PSU is too broad, but I think it's in your infrastructure, in your capital goods, power, okay, and then and metals. Those are the ones which have broken out. On the other end, I would probably look at IT a little bit, only because of its life high, not anything else, and definitely at the bank Nifty. I mean, you can't ignore the banks in India. The economy has to grow, the banks have to grow. It's a simple thing as that. And any of these 3 major sectors like infrastructure, realty, capital goods growing, I just believe the banks will just by default automatically do well. Okay, so that's the view on. So what I'm not, though it could grow, my preference, I'm not looking at pharma so much, and I'm not looking at IT so much, And what else? I'm not looking at autos so much. There might be technical views on it, but from a fundamental, from sustainable perspective, I would not perhaps look at it. All right. Any questions? Okay. So what we want to do next is basically get into all the 50 stocks of the Nifty and then have a review of them again from a slightly longer term perspective, and then follow up that review with what happens on 16th and 17th, so that if you find anything which we discuss in these levels at that time, then you know, at least you have some idea on what you might want to do at that point in time. Okay, so let me close all this. So, let's close out. So starting with ACC, so you had a very nice run up on ACC from 1000 to 1400, almost in one straight vertical line, 40%. I don't know if any of you had you started LFT at that time? No. Okay. All right. So technically, very, very good support at around 1200 to that 1100 zone. Lots of moving averages support and lots of price action in that 1100 mark, 1100 to 1200. 1200 will be the first level to watch. You've got some really good double bottom type patterns at 1000, and then you had a significant rally. Not really the neckline of that, but around 1200 you've got a 3-year support level. So if 1200 comes, that's one place that potentially could be a buy.
So what are you reading from moving averages?
Good support, especially to put this in the daily. You've got a whole bunch. You've got the 200 and the 100-day moving averages at 1200, which do tend to act as pretty good supports when the stocks on the upper side. So definitely not looking at any buys at this point. 1400 is a significant resistance, but 1200 could really be a good support, and all coming down on lower volumes in the last 2 weeks. Okay, so more or less Ambuja and ACC really track each other. The only difference is Ambuja almost made a new life high and then came down from it, while ACC has not. So if I had a preference between the two, I would rather do Ambuja Cement than ACC, simply because Ambuja is more set towards making a new life high. ACC is not. Clearer resistance and you can get a faster move. But in the same Nifty space on the cement side, you have Ultratech, and Ultratech actually did make a new life high. So in order of preference, Ultratech first, Ambuja next, ACC last. All right. So Ultratech also went up, formed a sort of rounding top, has come down, and as you can see, is sitting on a nice support level, and that is created by the 50-day exponential moving average. Of course, as somebody correctly said, there will always be some moving average or the other that you can find, but your 50, 100 and 200 are the ones which are widely followed, and basically you're trying to look at where a lot of people in the market might be looking at it.
Do these other companies come in the reality or infrastructure?
I think they will be included in the infrastructure index, not in the reality index. Okay. Now, I have personally liked, looking for the following setup, which is that a stock creates a new life high, and then consolidate there for some time, like this did Ultratech at 2000, and it went there in mid 2012. From mid 2012 till 2014, it was not able to break 2000. So that's like 2 years resistance. It goes beyond that, creates a new life high at around 2300, and it is now back to 2000 bucks. What I'm saying is this 2000, which was a life high for 2 years, is no longer a life high, but is an old life high, is now being tested, technically speaking. And if 2000 were to hold, then that support gets stronger, 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 and any sign that this turns around from that 2000 level, could make the stock go much higher. So for 2 years, it's not gone higher than 2000. For 3 years now, basically for 2.5, 3 years, and if somebody wants to do fundamentals, you can go and check if the earnings have, improved or become less, or whether PE ratios have improved or not. Okay. Not the cement price, the stock price. So the company's earnings versus the stock price. So 2000 could be a good support for Ultratech. If it breaks down, then 1800 is what you are probably looking at, technically speaking. 1750, 1800. Okay. So Asian Paints, a lot of these, the run up, you have a very clear ascending triangle, broke down, and for yeah, okay, Asian Paints, so clearly broke down from ascending triangle, clearly met your measuring implications, and then actually has gone lower than that and has taken support at around that 500 mark. So 500 has become a short-term support for Asian Paints, that's for sure. All right. So again, 500 is a support that comes from mid 2013. So it's not something which has been recently created. It's been there for quite some time. So you could look at that. Maybe if it comes down, then you're looking at around 470, 480. So Axis Bank. So Axis Bank has a life high at around 1610, and that's a life high of 2010. So that, again, it's coming there 4 years later. Again, one of the things that I like to look at is a stock, how does it perform versus the index or versus similar other stocks. Axis Bank is pretty much, very much in line with the index. So the index has come to a life high, Axis Bank has come to a life high, unlike some other banks that you will see later, which are very, very different from their individual life highs. So this is a stock which, once it clears 1600, has the potential to go much, much higher. Given that I am at least talking in the overall framework of what if the market goes down, I think around 1250 you have really good long-term support. So I think I should elaborate this. This is my broad view, again taking off from where Prashant presented to us in the morning, that Modi's win is probably priced into the market as of now. That's what the market expects. So the market, in my view, expects a Modi-led government to be formed. What is not clear is whether BJP comes with an absolute majority and does not need coalition support, or they need coalition support. And then I think that's one key thing. The real question, therefore, if an absolute majority comes, which I think is unexpected at this time, then you could see a big kick up on Friday or Saturday or Monday or whatever. Okay, whenever trading happens. That is if an absolute majority comes. You will see one big sudden move in the market, and then inevitably there will be a cool off and everybody realizes that okay, fine, the guy is in charge. Now let's see if we can deliver on all this talk. Okay, so can he make the Gujarat model happen across India, or was it only around Ahmedabad and the Narmada River and all? So we'll find out soon enough. So inevitably, once he becomes the Prime Minister, he cool off. There will be a run-up further, I believe, if they get an absolute majority. The question is if this expectation is not fulfilled, which is Modi for some reason is not the Prime Minister. And it's not just Modi not being the Prime Minister. I think even if BJP comes to power and for some reason, okay, because there is this anti-Modi faction within BJP. So Sushma Swaraj and all of those who, Advani also, they have been sidelined. Huh?
Prime Ministers in waiting.
Prime Ministers in waiting, yeah, well said. There are all these other Prime Ministers in waiting. Modi has built up his whole thing on the thing that he is going to lead BJP to one impressive victory. Now, what is impressive is a matter of debate. But for some reason, what is the number, 230 or 270? How much? 272 they don't get. Okay? And they get, let's say, 230 or something like that. Okay? So if they get anything less than 230, then they will be after Modi's blood. Okay, they will be like, what was the whole Modi deal about, and all these other Prime Ministers in waiting will happen, and even if it is a BJP-led government, you're going to get some instability, and you'll probably see a sell-off in the market. So even if BJP leads, but it's not without Modi, you're going to see a sell-off, right? And then there are going to be all these political compromises that will happen, and the question of stability itself will happen, and blah, blah, blah. The worst case scenario is, of course, what was already mentioned. Suppose you get a fractured mandate, which nobody is expecting right now, but India has been known to surprise on its political side. If that happens, then that's when the big sell-off comes. That's when I think this year's entry opportunity is. I will stretch my neck out to even say that, that sell-off could be the bottom that you get for many years. You will not see that price again for 4 or 5 years. And if you miss that opportunity, I think you're going to be a very sad person months and years ahead. So you have to look at all these various scenarios and see how you're going to set yourself up for it. All right. So Axis Bank 1250 on the lower side. Once it breaks 1600 on the upper side, then this thing will just keep climbing much higher. From just a pure psychological standpoint, that 2000 will become the next resistance level for Axis Bank. Okay, so Bajaj Auto was doing all well till, of course, you had the strike, and Rajiv Bajaj came out and said, I'll close the plant down for 6 months also, it doesn't matter, we're not going to negotiate. And then I don't know if you saw that the union said, yeah, we're going to give them 2 more weeks and all of that. So now it's like, who is going to blink first? Very interesting article in Business Standard, I think 2 or 3 days back, as to how the slowdown in the auto industry is actually creating labor trouble across a lot of the auto companies. Toyota had a lockout, Bajaj is having this, Maruti had a strike. Maybe all, so management is trying to cut down on expenses because the sales are not happening. Employees obviously want more, and then that's where the tension is. So who knows? So Bajaj Auto has clearly broken through very strong supports. All your moving averages, and see how it, at 2000 it hesitated there. So that's your 2000 mark. It sat there for about 3 weeks before it decided, fine, enough is enough. This will have to go down, and once the stock decides to go down, it just goes down. If it was not for anything else except human psychology, there was no need for it to sit at 2000 for 2-3 weeks. So that's technicals for you. The support now is, where is this? Okay, is at around 1900. It's already there. So if it goes lower, then you're looking at 1830. It was actually doing a nice sort of, consolidation or saucer type. Of course, it's not at a downtrend, but had it done that and completed it, then after breaking 2200, it would have gone much higher. But anyhow, for now you're looking at 1850, and any buying of this stock should happen only after it crosses 2000 again on higher volumes. Okay, so Bank of Baroda, the public sector, so it was 500 rupees 2 months back. It is 800 rupees now. Okay. So that's when it was obviously in retrospect a very attractive buy. Any downtrend that you put on this has been broken. Okay. So if I put the only other downtrend line possible, which is from there to there, okay, even that has been broken. So there is absolutely no doubt about the Bank of Baroda, or for that matter, many public sector stocks being in a uptrend as of now. They'll keep probably going up. On the downside, 750 is what we're looking at. I think we should never use the word worst, but in the short term, next 2 weeks, the worst case scenario is 700 bucks on Bank of Baroda. If it can support that or stay above 800, and 800 is again a multi-year support, then I think it's going to go back to its life high. So please note, the Bank Nifty is at its life high, but Bank of Baroda is quite far from its life high. Actually, you'll see that most of the public sector banks are way below their life highs. So in terms of catch-up, they have a long way to go. The thing is that in the 2010, when the Bank Nifty made a new life high, all banks participated, the private sector banks and the public sector banks. But this time, when the Bank Nifty is back, there was clear separation of these two things. And like Prashant already mentioned, it's mostly on account of your NPAs. And once those things get sort of, managed, and if you see, I don't know which bank was this, I'm forgetting the name, one of the starting an asset reconstruction company. Okay, not just sold off bad assets, but somebody is getting, forget which bank. So basically, they'll package it out. That's what's going to happen. And the bank balance sheet looks healthier, and it is, because now you are, you have sold it out, you have accounted for it, you have cleaned it up. The bad debts are in another company, it has nothing to do with yours, and that's it. Okay. So watch for this ARCs to keep happening. ARC is asset reconstruction. Okay. So if ARCs pick up, especially in the public banking side, you will definitely see these go up in the next few months. On which one? You take that, you're saying?
Yeah, take that. 2011
Okay, that's 2011. I mean, that's your worst case scenario. So, if you're saying that's the one, right? Okay. So if you look at this, another one, I'm just putting up. And you have these three downtrend lines, okay? Of course, from two different points. And the thing is, each one by one has been broken out. And technically, that's your evidence adding up to a stronger and a stronger uptrend which is there. So this last one is probably not yet fully broken out, but is definitely, making an attempt to do that. So on the lower side, 750. On the upper side, 800 plus minus 510 rupees. But once it is able to sit above that for a few days, then I think from 800, 850 to 1000 is something that could easily happen on Bank of Baroda. Okay. So this is interesting. I thought Bharti Airtel would have gone up. So Bharti Airtel 350, immensely strong resistance. Okay. When did this TD SAT verdict come out? After market hours or before market hours? So yeah. Huh? Yeah. So all that got waived, so that's why I'm wondering why it's not up. Okay, fine.
Because the results it went up.
29th was the result.
Okay, fine. So 315 is actually good support as of now. Okay. So you need to watch for 315. It's at 330, 328. Sorry. So if 315 comes, then that's a place where good support could happen. Because the real action is going to happen on Bharti only once it crosses 350. I think since just to go back, sometimes we should just change this sequence and do that. In my opinion, you've got something like Axis Bank, you've got something like Ultratech Cement, which in my opinion technically a better position than Bharti is right now. So I wouldn't look at Bharti right now. I would put an alert on Bharti and say above 360, and that's the time to actually reconsider it. In terms of sustainable moves that are possible, a sustainable move in Bharti is not possible till it can sit above 350. It's tried to go above 350 for 2 years now, and it has not been able to do that.
The previous year announcement is that they need to pay the penalties or they don't have to pay.
They don't have to pay that.
They don't have to.
They don't have to pay.
That's exactly yes. They do.
I think so. And there was a news, I think, day before yesterday or today, that Bharti is going to cut the discounts. Okay, so they're going to cut. Yeah. Maybe all of them cut. Okay, so fine. So that's good fundamentally. Okay, if they're going to cut discounts, then eventually it shows up in the fundamentals and the stock goes up. So 350, 360 is your alert. All this fundamental news is good. The TD SAT thing got squashed. They're going to decrease the discounts. You should see something good happening in the weeks ahead. BHEL is at an extremely critical level, which is at 200 mark. Till BHEL breaks 200, again, just to connect this to the capital goods stock. Okay. So BHEL is both a capital goods company, it is also a public sector company, and you saw that both those indices have broken out of long-term downtrends, and you see that in BHEL here. So it's actually got a confirmed uptrend. Okay, nice higher tops, higher bottoms. It hit that 200 resistance very, very clearly. That resistance has been there for how many years? That's the resistance that got created, a level rather that got created in 2006. So once BHEL was to sit above 200, it's going to definitely go much higher. So for now, it is just sitting there, not done much. Wait for the 200 to break. On the lower end, 160 looks like the worst case scenario on BHEL right now. Okay, so this is why I keep saying BPCL. It's at or made another life high last week. Okay. Has come down, I believe, more because of market related factors, nothing related to the stock itself. So let the election get over, let the diesel decontrol thing kick in again, and you'll probably see BPCL at a much higher level. On the downside, maybe 420 is a level to watch for. On the upside, once it closes 500, then it's got much, much higher levels to go. It creates a new life high. If you look at the last many weeks, every 2 weeks creates a new life high, cools off, again creates a new life high, cools off, and then is in that sort of pattern. Alright, so something happened with Kane, absolutely no idea what. It was nicely going up. I think there was some corporate announcement, some result. I don't know whether it was bad, whatever.
Poor projection.
Poor projections, is it? Okay. All right. So, a lesson for traders. If you are a trader and you don't manage your trades, this is what will happen. If you are a long-term investor, it really, in my opinion, doesn't matter. If you look at Keynes' fundamentals, this is a company that basically started generating revenue for itself only 1.5 years back. Till then, it was just digging holes in Rajasthan. Okay, and it sells its oil at the full international price to whoever, including the government of India. It does not bear the subsidy burden. Therefore, this stock is directly related to the crude oil price, generally speaking. Now, projections apart, if you look at the PE ratio of this, it's ridiculously expensive. But that's because it just now started having a positive EPS. So this is not a ratio to look at for a stock like this. You look at book value, price to book value, and issues like that. I think in the longer term, Keynes would probably do well. I don't know if it's right now a time to buy. It's too early to say. But it got stopped by the 100-day exponential moving average. It's just sitting there at the 100-day exponential moving average, going sideways, and then we'll see what it needs to do next. Just keep watching this. If it comes to about 310 or 315, that would be a really, really good place to buy Keynes. Okay, so Cipla is a stock you should not even be in. You should not be going long on it. You should not be going short on it. This is a chart from 2012, and you can see that since mid 2013, it's just basically gone sideways. The stock has not decided what it wants to do. It's like your IT space, your FMCG space, all going sideways. So there is no call on Cipla. You should not be holding Cipla. You should not be long on it. You should not be short on it. Coal India tends to be a very, pretty erratic stock, but all said and done, okay, has now sat above a very important support level of around 286. So it's done multiple moving average crossovers. You could even put this here. A symmetrical triangle which was there on Keynes, India. The only thing is the breakout didn't really happen with good volumes. But all said and done, the 286 is an important support that it is sitting on. Need to keep track of it, and if it comes to around 270, that will be a good place to buy. 325 is a good target. After that, it will be 360. Okay, so DLF sat on this level of 155 for 1, 2, 3 days. Then just notice how support slipped and became resistance. So you had lows at that 156. Then you started to get highs at 156, and then it has just completely capitulated after that. So definitely no longer even a consideration of a buy, and it's possible that it could be looking at the light low of 120 now. So in 2 weeks, the view on the stock has gone from probably bullish to completely negative right now. Fundamentally, there has been no change, but there has been a change in the sentiment on the stock with BJP, Vadra, DLF bashing going on and stuff like that. So here's one thing. For some reason, if BJP doesn't come and Modi is not elected, this is a stock you should immediately buy. It's going to react by 10% up just purely on sentimental reasons. So the exercise that everybody has to do is simple. You've got to, from now till at least by 12, create your lists. If BJP comes with 300 plus absolute majority, which are the stocks? What levels? If BJP comes with a coalition government and Modi is the Prime Minister, then if we get a fractured mandate, then in every scenario, I promise you, you will have some stocks that you can buy. DLF is one of the stocks that you should buy if BJP does not come with the expected margin that it is expected to. Which other stocks you should just buy outright if Modi comes with a great victory? Huh? Again? Tata Motors, you buy the Adani Group stocks.
How did it go up?
It will go up another 40%. If he comes, it will go up another 40%. Because he was now only, Gautam Adani was getting only Gujarat support, now he gets the national support. And what about Reliance? Okay. Reliance, I think it does what it does no matter what government comes. Yeah. So,
You have got it, right? Okay, and this was it was there in the news that even Tata Steel and Tata Motors.
sure. Okay. So, that's a real challenge. Because you don't know, I don't know, nobody knows the election outcomes. But for every scenario you can think of, there are things that you can strongly go long on, strongly go short on. You have to have that list ready with you before the results are out. If you haven't done that, you haven't done the exercise. You haven't done your homework, you are not prepared for the outcome. You are ready to play whichever, the way to imagine it is like this. You've got this, you are ready to run, it depends on which door opens. Whichever door opens, you run through that. That's it. If you are not sure, then you don't even know what to look for, and even when the door opens, you don't know what to do. You just frozen there. So plenty of time to sit and think and review, etc. Okay, so Dr. Reddy's Pharma.
So if you are recommending that strategy.
If you are looking at the election as an event opportunity to trade, then what are you going to trade? It is an event-based opportunity. There is no doubt about that. It comes once in 5 years. Some stocks will move, some will not move, depending on what the outcome is. So, if you want to take that as an opportunity, then sure, you have that coming up. But you can't on that day start thinking which stock. You've got to have your list ready. And then, depending on what the results are, the list that you act on is in front of you. And you have to have this watch list on your screen on that day. So, especially for all the guys in the mentorship program, you'll definitely have a trading room that day and see how the market behaves through the whole day. Okay. Okay. So, what did you want on GoToMeeting? Stop and start. Oh. Oh, it wasn't recording the music. That's fine, whatever. Okay. So you have Gail here. What happened to Dr. Reddy? Okay, so interesting that Dr. Reddy is actually showing some strength downtrend, recent small term downtrend broken, and I don't know if this is event based, news based or something, but Dr. Reddy has definitely shown some strength. So if okay. Good support at around 2,600, 2,550 levels. Definitely one of the stocks to have if the markets go down. Alright, so Grasin. So look at that pink line on Grasin. That's the line which has been there from 2006. That's 3,000. And it really has not been able to sustainably cross that 3,000 mark for very, 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 very long. So until and unless Grasim can break that 3,000, it's not a buy. But on the other hand, on the lower end, 2,500 is excellent support on Grasim. And worst case scenario seems to be 2,200. So if you saw Grasim at 2,200, I think it's definitely a buy on Grasim. And if it breaks 3,000, you should definitely pick it up. It becomes a short-term trading opportunity, even probably in the futures market. Okay, HCL Tech. So it's been a 300% mover since mid 2012, and as of now, even though it seems to be a little tired and going sideways, the uptrend is not over. So around 1,350, HCL Tech is a potential buy. Resistance is at 1575, and if it can clear that, then 1750 and 2000. SDFC should definitely be on your list because it created a new life high last year, again this year, and all that stuff about if inflation has really peaked off, which I don't know whether it has, but if the data is suggesting that, and if that's what happens, then HDFC will do very, very well. Please note that how nicely and accurately it came and sat at 861, and from there bounced up 920, 925 is a good resistance. Once it clears that, 950 and 1000 is going to come. For those of you who want, I think this is something that you could consider, especially on your FNO side. Okay? Why the FNO side? For some reason, it was called HDFC is fundamentally a great stock. If you are willing to take the mark-to-market stuff with it, it will recover even if you have a loss. If you can't pay so much, let's say for DLF, have you done that? DLF will also recover, but it's going to, event-based, it's going to take a lot more challenges and all. This one is a lot safer, and it's at nice technical levels, little bit in the no man's zone between 860 and 915, but it definitely will break out, and then after that you'll see much higher levels, 950 and 1000. You could. I mean, this is you could do that. Yeah, sure. You could do that by puts if you want. Okay. Yes. I mean, I think given the event, you should definitely hedge it. Okay. Or it's definitely a stock to watch out for on 16 or 17. And if it slips down, fine, slip it down. Buy long low. If it goes up and breaks up, buy long when it makes a new life high. Either way, it's definitely a buy. There is no question of shorting HDFC at all. HDFC Bank. So now this is again a bank which is making new life highs. We got a new life high last week at 760, and it has slipped down. Again, demonstrating that setup that I like. It created a new life high at 760. This is the old life high at around 715, 720. It's come there, and if you notice, it started to go sideways. Of course, this time it's being supported by your long-term moving average is there, but nonetheless, that is good. support. This support is likely to hold, in my opinion. If again events and all of that shake it up, it will go to 680, and if it does go to 680 or even for that matter 640, it is definitely a buying opportunity. Hero Motors. So Hero Motors, probably not, there's nothing like 100% accurate in markets, but Hero Motors is partly benefiting because of Bajaj's labor problems. So while you saw Bajaj clearly slipping down, Hero Motors is clearly going up. Right? So if you look at it, has made a new life high, slipped down, but then has again able to climb back up. So the new life high for Hero Motors is 23, almost at 2300. If it comes down, I think as of now the worst case scenario for Hero Motors is 2000 rupees. Hindalco again, to demonstrate what we talked about metals and the commodity space. This is the long-term downtrend that Hindalco has broken. From 2010, this downtrend line here took support on that downtrend line and then has gone up, and I think at around 128, 130 is a level to watch out for on Hindalco. If you get that, you should definitely think about buying it, and look at how the volumes have significantly dropped on Hindalco as it has gone either sideways or come down. So there is clear buying interest in Hindalco on the upside and very little selling interest on the downside. That's the sort of stuff you want to have. A stock like this is with the technical setup the way it is, okay, which is a breakout of a multi-year downtrend, plus the metal index on the cheaper side. Okay, this is a good combination of technicals and fundamentals, where both of them are in line with each other. Of course, the best thing was about maybe 3-4 months back when in stock at 134, the stock was at about 110. Fantastic opportunity at that time, but anyhow, it's over. But if you're looking at it from a multi-month, 2-3 year perspective, Hindalco is definitely something that you should be having. HUL, Hindustan Unilever, I would say, if you look at it, really going sideways for almost a year now. You don't want to be in a stock which is going sideways. The only thing that you want to do in a stock that's going sideways is write options. You don't want your money in a stock that is going sideways. So Hindustan Unilever, no call on this right now, and definitely no long or no short. ICICI Bank. So ICICI Bank is a slight underperformer, which is, why do I say that? Because many banks in 2010 made a new life high. ICICI Bank did not. Okay, it has now come back to its 2010 high, and it has not yet reached its 2008 high of 1,450. It is 200 rupees short of that. So, as on a technical basis, 1,200 is really good support. Volumes have been okay, not really high or low, but 1,200 is a good support. It could come back all the way to 1,100. That will be the time to buy ICICI Bank. You could put this in line with, so again, when you look at Axis Bank made a life high, but ICICI has not. HDFC made a new life high, ICICI has not. So playing a bit of a catch-up. IDFC, so once IDFC did not get the bank license, the market has lost interest in, it got the bank license, and then 18 months restructuring, blah, blah, blah. So the long-term story on IDFC is simple. Buy this stock and hold it for 18 to 24 months. Why? Because two companies will come out of it. One will be the parent IDFC here, and then you're going to get IDFC Bank shares, which will happen. One of the best ways to make money is to be in a demerger story. So when a company demerges, it gives you the baby shares. This is not a short-term thing. This is a long-term thing. I would even recommend go buy these shares. If you don't have bulk liquidity, put an SIP on IDFC for the next 24 months and just keep buying whatever, 10, 20, 50 shares every month or whatever you can afford, and just build your portfolio on IDFC. Okay? Over the next 5 years, once IDFC and IDFC Bank separate out, you will see that both those stocks later on will probably do very, very well. In terms of, sort of combined multi-bagger returns, when I say combined, so your initial investment is IDFC, and then you'll have IDFC Bank, which comes to you as a baby company. Okay? If you look at the end result, say 5 years from now, of your baby stocks and the parent IDFC versus what money you've put in, you should probably see a very, very good compounded annual return. So,
support level.
yeah, definitely. It's at support level at 110. Good support. You've got horizontal support, plus you've got the 100-day exponential moving average. All that stuff is there. But I think the story is not really about short-term trading on IDFC. It's about accumulating this stock for the long-term benefits. Minimum 2 years should be your time frame on what we're discussing. Ideally, 5 years. Okay, so IndusInd Bank, you can see very clearly has made new life highs, or almost gone to a new life high. Come down with the rest of the market. 450 is really good support. Otherwise, it will be around 400. This is another stock that could really do well going forward. INFI, okay.
So we have stock number 36.
Alright, so Infosys has pulled off from 3,800 and is now going sideways and consolidating at 3,100. There's a huge gap here in Infosys that should not be forgotten. So gaps need to be closed, and if and when, where is my okay, so there's a gap here between 3,600, 3,650 and 3,420. That gap will get closed eventually. Huh? The price goes up through that gap. So when it does that, that's going to be a good, nice trading opportunity from 3,400 to 3,600. $200 that could happen in a day, 2 days, 3 days, a week, doesn't matter. Good, nice trading opportunity, but for now, watch for 3,100. Does 3,100 hold? Does it not hold? And below that, the 3,000 hold or 3,000 not hold. If it does, then it's definitely a good buying opportunity. All right. It doesn't go below that.
Or it is 2-3 days in that place.
It's already been there for 2-3 days at that place actually. What we need is evidence that it's going up. Okay, which is not there right now. It's more or less downward move. Now it is sidewards, and then you'll have to decide how this is going up. At this point, you need, let's say, look at the resistance zone, then that would be at around 3,350. At above 3,350, above 3,400 is when you should start buying. As of now, If the market were to slip, let's say to 3,100 or whatever, then you'll see some other what happens. If it slips below 3,000, then we'll have to review the thing and see where the support is at lower levels. So, just to be clear, so when I say take support and look for lower levels, what I clearly mean by that, if the market is going down, you need to see it form a base, and then you need to see evidence of it going up on better volume, and that's the time to buy it. Whether you buy it on the higher volume picture, or you buy it because the technical resistance has been broken, those are individual choices. Now, this is one of the reasons why we say, get out of FMCG. Can FMCG go up? Yes. But you clearly see 1, 2, 3, 4, 4.5-year uptrend channel, the yellow channel. From out of this 4.5-year, 5-year uptrend channel is now clearly broken. And though there is no downtrend, it is definitely a sideways trend. So there are headrooms, technically speaking, on the ability of this stock to now go up. So this stock has given a sort of from 82 rupees to 340 bucks. That's like, how much is that? 400%. A 400% return in 4 or 5 years. Could it give more? Yes, of course it could. ITC fundamentally is diversifying, getting into more product groups, it will probably demerge later, etc. So on the multi-year story, yes. But from a short-term perspective, you want to stay, out of it as a trader. See, this is what I mean by forming a base. So at 310, it came down, settled down, took support here multiple times, tried to go up, did not actually, came back to test it, and then finally went up. So this would be the buy zone, somewhere here, So if you were looking at this, let's say, there, that would be a good time to buy ITC. Okay. Now, we have evidence that it wants to go up. Okay, so Jindal Steel, it was exactly at this resistance of 300, okay, and then just completely cracked, and it has done that on slightly higher volumes. So as of now, this is again, if one wants to reinforce a lesson in Doe theory, what does Doe theory say? Be on the side of evidence and act only after the market has decided that it is clear it has taken direction. Without it breaking 300, there is no evidence that this wants to go up. 300 is extremely significant resistance, not only for 1 year, but from 2007-2006 period. So let it break 300, let the evidence be there that it wants to go past 300, and then only you have a clear buying opportunity on Jindal. Having said that, on the bottom, on the downside, very, very good support on Jindal Steel at 230 and then at 210. So that's what, those are the levels I would watch for on election day.
Sir, to extend that, it was downtrend. So it's broken on higher volumes.
It's right, it's sure.
Okay, it actually broke that long-term downtrend, and that thick yellow line is the horizontal line. It is now acting as a resistance. So you want that, we have to watch out for that breakout.
Now you have to watch for the downtrend line also.
Or we have to watch for the downtrend.
So this could also be a resistance, that could be a resistance, both are resistance zones. That's the places to watch for.
So you would want to put this in a watch list so that you want to track that.
Absolutely. Absolutely.
Since this also happens to be in the metal space,
Yeah.
you have to fundamentally we know that the metal space downtrend has broken.
Correct.
And this is also in sync with the index. You want to keep it in the watch list and continue with the trend.
Short term, in this case, when it breaks out of the downtrend line again,
Here?
Now when it goes fine, if it goes fine,
Ah.
about that.
Yeah.
So
Sure. So suppose as of now, suppose it went back above 275, 280, then yeah, 295, 300 is a good target to look at short term. Okay. Any long term targets are only after it sits above 300 for 3-4 days. Okay. Right. Let's take a 5-minute break and then we shall continue.
that's what I'm actually found.
Okay. So that was Jindal Steel. Next is JP Associates.
I really didn't know that it was
See, how many of us do any fundamental analysis of anything? Everything, fundamental analysis has its place and there's definitely good use in it.
Because another thing I've noticed, the ones which are not restricted to zero, they are always performing.
Yeah. Obviously. JP? Okay, good, we'll skip it. Great. Okay. Kotak. So Kotak is probably, along with Axis Bank, should be there top of your list in terms of banks that you should watch for and buy. And any dip in Kotak is definitely a good buying opportunity. I think it's the most expensive private sector bank amongst the whole lot. Huh? Yeah, but it continues to keep doing well. So it would come down to 750. That would be probably the worst case scenario as of now. And then if it crosses 812, then I think 900,000 is not very far off on Kotak Bank. L&T, so cooled off mostly because I think overall just lack of interest in the market. But in the capital goods space, this is the top stock in L&T in capital goods, and it's close to its life high of 1,500 on an adjusted basis. We are given bonus shares, so it's coming to sort of a triple top again, as you can see. It's coming back to its 2008 peak. I don't think in the large cap, mid cap space there is any other capital goods stock which has performed so well as L&T has. We keep getting contracts one after the other, so. Okay. So given the size of Qatar and given the size of L&T could probably finish that contract in 2 weeks if they wanted to. Qatar is a very small place. You have to really go there to realize how small it is. If I tell you that whole of Qatar is the population of cantonment, there are, I think if my numbers are right, 3 lakh Qatari citizens, that's all. Okay, and the expatriate to national ratio is 7:1. So there are 7 expatriates to every national. That's how it is. Yeah, that's how wealthy it is. It's the richest country in per capita basis in the world. But if you drive 100 kilometers in any direction, the country ends. One side is the sea, other side is Saudi Arabia, I think, and the other side is Dubai, UAE. And you can get a dead straight road, put cruise control, hit the steering straight, and in 45 minutes you'll be in another country. That's it. So, anyhow. So, L&T, I think is a really, really good buy. Infrastructure, remember, valuations are cheap. It has come out of a long-term multi-year downtrend, and L&T is the best pick in the whole basket. So,
What is the capital goods sector and infrastructure? What is the basic element difference when you say capital goods versus?
so what is the definition of a capital good? A capital good is anything which is used to make another good. So a CNC machine is a capital good. An earth mover is a capital good. A truck is a capital good. It has no primary purpose of its own as in the end-use product. An end-use product is a laptop. Okay, from a CNC machine you make, let's say, components, and those components are again capital goods. Those components go into a car, into a tractor, into a bicycle. That's your finished product. So that's anything in between. Any tool used to make another tool or a final product is a capital good. One of the stamping machines to make car body parts, that's a capital good. A welding machine is a capital good. You weld something and make something else out of it. Turbines are capital goods. Turbines themselves are useless. They make electricity out of that. Electricity is what you finally sell to your end customer. Okay, so those are capital goods. Infrastructure, everything that you build, roads, railways, airports, telephone lines, power lines, optic fiber cables, that's infrastructure. So capital goods and infrastructure are very closely related because infrastructure and capital goods, the need for infrastructure and capital goods happens in a growing economy or where infrastructure is very less. India is a country where a lot more infrastructure development needs to happen. If you need to do that, then you need to have a lot more capital goods also to make that infrastructure happen. You need earth movers, you need trucks, you need cranes, you need all that sort of stuff, surveying equipment, welding equipment, iron, steel. So anything there, it's all interconnected because to make infrastructure happen, you need capital goods. Okay, so in the case of L&T, what's significant is that it's both an infrastructure player, primarily actually, and also a capital goods player. So it does both. So it benefits from an overall recovery in the economy. And if that's what the economy is doing, both globally and nationally, L&T will be one of the largest beneficiaries of the whole space. It's tough to go wrong with L&T. Okay, it's tough to go wrong with L&T. You just sit and buy it and that's it. Forget it. Keep buying. Yeah, if you are in for a long term, then why do you want to cross anything? Buy. L&T is one of the stocks which I would say is like a buy at any price. Buy at any value. Why? Because if you look at it in the next 20 years, the amount of infrastructure development, capital goods requirements in India itself, it's huge. What's happened? Correct. So that's exactly what's happened to L&T and every other infrastructure capital goods space in the last 3 years. That infrastructure thing has grown, road development has stopped, new projects are not happening, corruption has happened everywhere. But then the point is, how long will this happen? So it may happen for another 2 years, 3 years, 5 years, but then at some point that phase will come to an end, and that's when these things will do really, really well. If you can track those macros, then you can time your entry and exit into places like this. But if you don't know how to track those macros, you don't have the time, then just buy and hold on to it. So I would say that this stock, if not if, it's just a question of when it crosses 1500. It's at about 1300 right now, 1294. Is easily on the way to $3,000, doubling within a year or two from where it is. And it will do that in a nice, cool, consolidated, steady fashion without probably giving you too many shocks in between. So this is definitely one stock to look at. 1150 on the lower side is excellent support. 1150 is actually a multi-year life high on an adjusted basis. Right? Adjusted because the stock gave a 1:1 bonus, I think a year or two back. That's why these are adjusted prices, these are not real prices. So 1130, 1150, if it comes down to about 150 lower from here, you should definitely be thinking of buying the stock. Lupin, So unlike the other pharma stocks, which at least the ones we have seen so far, not so strong, Lupin is definitely showing some strength. In fact, that magic 4-digit number 1,000, the market has to get used to that $1,000. Once 1,000 gets crossed, then the stock would really go much higher. Uptrend is pretty much strong even now, unlike if you compare the FMCG and other pharma index. Within the pharma index, Lupin is definitely doing well. So M&M, Mahindra and Mahindra, so continues to impressively make new life highs. And in the last week, when the market has cooled off, this has continued to actually rise. So M&M is definitely one more place that we should definitely be buying. You can see the symmetrical triangle here, which broke out very nicely, and the stock nice breakout there. Okay, on volume, you can see here the volume did pick up, right? So higher than average volume, and could possibly actually go much higher if it comes down on election day or whenever. It could test that 1,030 to 1,000 level, and then that will be a time to get into M&M again for the long term. So it's been making, sort of this significant life high was crossed after the 2013. So it's taken a year to sort of go back up, and it's a really good company. New products, this, new that, etc. Who knows? 1,500 on the stock in the next 6 months to a year, definitely possible. Maruti. So that Gujarat thing got out of the way, and then now Maruti is up to 2,000 rupees. I don't know if you saw the news about the Celerio AMT waiting period is now 8 months. So it was 4 months and became 6 months and became 8 months. So that car has got attracted a lot of attention. The AMT version is premium price. That means they're making some good margins on it, and if you've got an 8-month waiting period for it, definitely good news. Right? Celerio. So could come down to 1850, even 1750. I think worst case scenario is 1650 or 1500 right now. This is where the announcement of that Suzuki Gujarat thing, and the market didn't like it. It crashed there, formed a really nice double bottom, tweezers bottom pattern there. So I don't think it's going to break down here. However, there is this gap in Maruti all the way from there to there. Okay. Sure. In the near term, I personally don't like to see gaps on charts, and so in order to close the gap, it will have to come to about 1750. That time will be a really good time to buy Maruti. About 1875 to 1750. NMDC. So NMDC has, what it has done, has broken a multi-year resistance line, right? Like Hindalco, NMDC has broken a multi-year resistance line of 145, and what it has done after that has gone sideways. And please note, this is what I mean by relative strength. The markets have cooled off, but NMDC has not. It has stayed very strictly sideways, very long dojis and spinning tops and all that sort of stuff at 150 exact. Okay, plus minus 2 rupees, we said that side, it is consolidating. Could come down to 145, could break down, could even go to 135, but I don't think it will go below that at this point. And again, BJP comes back with, again, public sector, and what does it do? Commodity stuff. So if you remember, the commodity space was cheap, and the public sector thing had broken out. So two things supporting NMDC to go up in the longer term. So short term, if it whenever the market corrects 130, I think worst case scenario is 125. But once it clears out of this place, then 180, 190 is possible. By the way, what sort of pattern do you see here on NMDC? That's a flag. Okay, that is a flag from about 125 to 150, 25 bucks. 150 plus 25, 175 is your target on NMDC. NTP. Sure. Could be, but your big issue right now is your event risk. If there was no election result, I would have said, buy it at 147 or something like that if you can, or as soon as it gets 153. But given that we have this result out there, it's just better to be careful. But I don't think. I personally don't expect any major moves till election results are out. Okay. So NTPC continues to disappoint. Power sector, public sector, both, but clearly still in a downtrend. So whatever uptrend it tries to do, it just gets beaten down. NTPC is the stock to short on 16 if you have a fractured mandate. Okay, from all the stocks that we've seen, NTPC is a stock to short if you have a fractured mandate on 16, 17. How far could it go? Once it breaks this level of around 110, I think, straight to 100, and then let's see. So it's at 116. We're talking about almost a 16% correction. I think at least till 100 is where it could easily fall to. ONGC, so again ONGC made a life high in mid-2010, alright, it's in that energy space, and if you look at this, basically a sideways stock right from 2008. So 8, 9, 10, 11, 12, 13, 6 years, it has created no wealth at all. If for whatever reason ONGC comes down, anything below 250, buy. It comes to 270, 265, 250, you can just keep buying ONGC wholesale. Unlikely that will come below 295, 300 as of now. And once the events are out of the way, I think it will make an attempt to go back to its life high, which is at 360, 365. Once it clears that, 400 is definitely on the way. This is extremely long-term consolidation. That's what you have to understand. 6 years of consolidation sideways. This is a Kumbhakarna stock, like I like to call it. It went in 2001 from 28 rupees, almost in one way, to 300 rupees. 10 times. Okay, a 10x in 7 years, and then after that done nothing for 6 years. Yeah, it's definitely, it's always there on that dividend yield list. So not only is it a good income generator, it has a good potential to give you a good move in the years ahead. Of course, it's going to test your patience. There is absolutely no doubt about it. Okay, but this is something that you should consider having in your long-term portfolio. Either when it comes to 250 you buy it, or you put an alert of breaking the life high at around 366 and then buy it at that time. Punjab National Bank. So see the difference. Where is Punjab National Bank now? It is at 780. What is its life high? 1400. Where is the Bank Nifty? At a life high. Where are the banking? The public sector stocks at 40, 50, 60% below their 2008 highs of 2010 highs. So these have a long way to go. And what's happening on the PNB is, again, as you can see, multi-year downtrend broken. Multi-year downtrend broken plus a horizontal support at around 3,710, which has come from multiple years. So it's like double strong supports on the lower levels at around 700, 710, 650 also. So could be a pretty good buy for the many months ahead. So around 710 is something that you should consider buying. Okay, if things come down. Otherwise, if there was no event, I would have said buy tomorrow. Nice uptrend, strong. Power grid again, 4-5 years of sideways movement, nothing great. You know, it's a lazy stock, hard to predict PSU and all. I prefer not even to look at this. Yeah, but it has done that here also. Downtrend broken out, but has never been able to go beyond 120. That's the problem. So let it break at 120, and then I think you've got a more sustainable move on that. Having said that, you have a sort of, a flag formation, but then seems to have really petered out and nothing much has happened with it. So no longer would play this. Once you don't get breakouts or breakdowns when import, this should happen, in that nice ideal spot. Any breakout or breakdown that happens after that is not so reliable. BIC, well, above 500, the stock would really rise pretty fast and go all the way to 650, around 325, 320 is great support. Please remember that there is still this heavy investigation going on, and there is a PIL that got the Hyderabad High Court. So event risks are significant in BIC. Just to gone. Okay, so
There is a good case, they should stop that. Very clear case of
insider trade.
Not when 30% increase.
So Reliance Industries, went sideways for 2.5 years in 2009-10, broke out, came down, and then settled down at the 680, 700 zone. From there, climbed back to 935. Now, I don't know whether Arvind Kejriwal spoils the party for them or not, but it looks. So I think for now it's stuck between 900 to 960, 970 on the upside. Again, you can see broad knee formation in this, and it has broken down from that big volatility that has happened on 30th, and you really need to just wait for it to sort of, what do you say, decide where it wants to go. I wouldn't say trade it, let that volatility settle down maybe to 900. When it comes 900, 910, then we can review it. Is Reliance Infra there? Alright, so SBI is at a very interesting juncture. So first of all, it's not cooled off with the rest of the market. Okay, so that's one thing that is strongly in its favor. The next part is that it's two very significant resistances just above it. So one is the downtrend line, and the other one is the horizontal resistance line at 2150. So that downtrend line, by the way, is from 2011. You cannot get a more extreme downtrend line on this stock. If that level breaks, and it's just a question of when, not a question of if. So once it's above 2100, 2950, it will definitely become a strong buy, and from there it could run up to 2500 quite quickly. So the question is waiting for it to break above 2150, 2200. On the downside, on election day, for whatever reason, if it comes down, you see it at 1800, just go buy blindly. Right? So it's at 2080, 2078 right now, but 1800 on 60 to 70, you should definitely think about buying it. Siemens? No, not there, no? Okay, so this is sort of literally a new company, Sterlite Sesagova, SSLT, so that was a merger. So you can't really compare it with Sesagova of the past. and it's just gone sideways between 175 and 205 for ever since it got listed. So on the downside, 175 is the place to buy. On the upside, once it crosses 195, 197 is the place to buy. Your real action on SSLT will happen once it crosses 205. Once it crosses 205, then I think 250, 275, 300 will come quite easily. Sun Pharma, so Sun ran back, let's see. So again, very good run up to Sun Pharma. Stock has gone from 100 rupees to 600 rupees in 5 years. Okay, and in 2003, the stock was 13 rupees. So 13 rupee stock has become 630 rupee stock, 20 times. So stuff happens. All right. So now it's consolidating and it's attempting to make new life highs at 640, 645. Whether it's able to break that or not, you'll have to wait and watch. But on the lower side, 550 is good support, and once it crosses 650, then 700, 750 is quite possible. Definitely would put only Lupin and Sun Pharma on the list as far as pharma is concerned. Tata Motors still going up, right? So JLR is doing extremely good for Tata Motors. That's really the only reason. We put a long-term trend line, then okay. So 450, at around 380 is good support. 400 is, if it comes to 400, that would be excellent. But like, just to remind everybody, 350, 340 on 16, 17, if it comes there, great. Otherwise, if it breaks out, I think the next stop for this stock is 500 bucks. So Tata Power, so we already said power sector is one place where a lot of action could be. Excellent double bottom at 70, has not been able to break out from the downtrend. So notice that it went there and then has just reacted down from the downtrend line at 85. It's now at 77. If it comes down, it's very, very unlikely to go below 68, 69, 70. Came down on a little bit of higher volumes, not sure why, but watch this on the downside. Again, if you are a strict follower of the conservative interpretation of growth theory, you should not be buying this till it breaks that downtrend line. Okay. On the other hand, if you believe that 70, 69 to 70 could be good support, good time to buy. You have two major bottoms there, one in August, September last year, March this year. That's very nice, good, solid support months apart. Sure. Yeah. Tata Steel, okay, definitely should be on your buy list as it goes down. This is the downtrend line that got broken. It got a really nice classic textbook head and shoulder bottom, which has formed over 2 years, and it's just a question of breaking 430 levels. Once 430 levels break, you should definitely think about buying it. Any slip down for whatever reason, let it keep happening. Something seems to have happened on volumes, and that's why it has gone down. I would say that it could come worst case to about 350. It's at 400 right now, and then from there it could bounce up. The thing is, it's got a whole range of supports at 390, 395, and at 375, and then at 360. So we'll have to see where it stops. But no doubt about one thing: if it crosses 430, 435 on high volume, you must buy it. The measuring implications of it are significant, all the way to 600. Not in a straight line, but could happen in a nice trend. TCS, right? So the risks for IT have already been discussed. So you basically have your IT, sorry, the rupee appreciation that could happen on Modi account, and then you have the, the challenge of growth. If and TCS is probably the best place to, you know, management-wise, bandwidth-wise, technology-wise, geographic spread-wise, to take advantage of any challenges that come up. So if there's one thing that you have to look at in the whole IT space, it's definitely TCS. If it does cross, so right now it's consolidating. Okay, you could 2000 on the lower side, worst case scenario, 2350 right now is your resistance. Once it goes back at 2500, 3000 are possibilities for TCS.
Even though inclusive guidance is not an industry guidance now,
Yeah.
TCS has taken it up.
Yeah.
But they only get the same media
True. So it's one of the stocks which is actually, if you look at all Tata companies are like that. Okay, they do their stuff in the background. Many years back, TCS top management was severely criticized for being very media unfriendly. You know? And I don't know if it's right, but they got media training because you want your investors to feel happy when they see you. When you give one deadpan expression and you just talk at your computer and say we'll do this, we'll do that, without any enthusiasm, without any, oh yes, we are doing that. And people don't like that. So while your numbers are speaking for your results, at the end of the day, you're talking to human beings. That's what the management had to understand. And I don't know whether it's true or not, but I think the stock started doing well subsequently. So the stock was good fundamentally, but sentimentally people say, what? Useless fellows. And now you love TCS and you've got a much more savvy management. Can be much more savvier, there's no doubt about that. But that's, I guess, a mark of time.
Media is big.
I don't think these big companies will indulge in that. They don't need to pay to get a
But how is the media support? Even though it has been doing
I think Infosys was your first darling in the IT space. It continues to be the darling, and it has this. See, unlike TCS, which is supported by the Tata Group, Infosys was like.
you will see the recent time, Infosys is the one which has come down.
Correct. But see, Infosys has a much more human story here. Rags to riches. There's a human element. There's a drama associated with Infosys. This one son is becoming that one, this one, that one, and the other guys are not. TCS is like proper corporate management. It's right. There's no emotion in TCS. So it does very well, but there's no emotional stuff. There's no drama. Yeah, so the question is simple. Why are you interested in Infosys? You should not be interested in Infosys. You should look at TCS if you care about your money. Okay? But like, Prashant said in the morning, we want to relate to a story, so you find stories. So you have the story of Narayan Murthy, as far as Infosys is concerned, and keeps calling you back. With TCS, there's no name. Have you noticed? Now, with Wipro, it's clearly Azim Premji all the way. With Infosys, it's Narayan Murthy all the way. With HCL Tech, it's Nambiar all the way. With TCS, who is it?
They never asked, how is Namo the right and step out now, in this year, everybody, after 2000 everybody comes to Infosys leadership in the secretary line.
Yeah.
Nobody has ever asked.
It's here. You know it's there.
It is there.
But in the sense, they don't make that kind of panic.
Because there is no need for a panic. Infosys.
They are the founders who have actually been there as leaders. Whereas TCS is not like that. TCS professionally has grown.
What I'm saying is, even though Infosys has a good professional team, likewise, TCS also has a good professional team. It's just that Infosys gets more weightage, more comfortable than the TCS.
I wouldn't agree with that. I think TCS has a structure. See, I don't know how many of you know about TAS. TAS is the Tata Administrative Service. Okay, it's a much tougher thing to get into than IAS. Okay, to get into tax is far more difficult than to get into IAS. And if you are in the tax cadre, you can be shifted into any startup company as and when your skills are required. So TCS as a group has a structure to create great leadership. Infosys is an accident. Nandan Nilikani came, Shibulal came, this one came, that one came. What did they do after Narayana Murthy? Nothing. They didn't really grow the company, and they each one had their excuse of what happened, what didn't happen, and all of that. Okay, so you don't see that in TCS. It grows. The point is, there's a mechanical process. There's a nice, long, filtering, cultivating growth process to make leaders, and it's backed by the entire Tata Group experience. Infosys started yesterday, in a relative sense. Tata Group started 200 years back almost. Infosys started yesterday, and they're still kids in front of TCS when it comes to putting those kind of structures in place. So that's why, we like the drama element around it. And you don't like TCS that much. There's no drama in TCS. Somebody dies. Fine. See, this guy committed suicide in Tata Motors. Who is that? The CEO. Okay. So what happened? Okay. They put the 4-5 guys from other Tata companies together. What was the TCS? Sorry, Tata Group chairman. Mystery came back, and they said we'll have what is that leadership group or something they called it. Till they find a new MD. Executive group till they find a new MD. That's it. So they have all these things in place already, risk management and all. If something happened to Narayana Murthy tomorrow, you can be sure Infi stock will be down 10%. Just like that. That doesn't happen with Tata Group companies. It's fine. If everybody pops it. Then we always have somebody right there ready to fill in if required. So, yeah, they have personal stakes. See, Infosys still up. See, in TCS, if some CEO comes back, the stock will not jump 10%. In Infosys, it will. It's still personality driven rather than process driven. And that's the big difference between these two organizations. Anything which is process driven has no human feel to it. It's dry, it's mechanical, it's repetitive. This drama, human drama, that's what you and I love. That's why serials are so popular and all of that. Okay, so we've done all the 50 stocks. I don't know if we missed any. If we did, Wipro is not. What happened to my list? Okay, so here's Wipro. So Wipro was making new life highs after 600. Okay, and then as just come down. I think this was some result thing. Okay, guidance, and then again has come close to its 200-day moving average of 510, and it's a question of whether it holds that or not. Comes down to 496 at some really good support. A worst case scenario right now looks at 450. Let me just point out here, or let me do Tech Mahindra, and then I come. Just remind me to come back to Wipro for a particular reason. Okay. IndusInd Bank, huh? Sorry? Macro, okay. Alright, so if you look at Tech Mahindra making new life highs, come back to its life high of 2006-7, right? And then just struggling there. Definitely showing some amount of strength. Nice uptrend from June last year, which has now become a sideways trend. As far as TechMinder is concerned, you should really watch this level, which is at 1680. If it breaks below that, and on the high side, you should watch 1950. So at 1680, you should consider buying it, and once it crosses 1950, you should consider buying it again. Right. So this is stock which is consolidating last 4-5 months, and we'll break out the breakdown one way or the other. We have measuring implication on the rectangle side, so you can go calculate that. Right, so let me just add that to okay. Which are the other ones? In the center. Huh? Have a? What they are listed. So for just looking at this stock because we discussed it last LFT, there was a nice flag on it, downtrend flag. Okay, so it's clearly broken that. It has clearly broken that. That was your downtrend flag. It's clearly broken that. And your target is how much? 850. So first let it come to about 1000. First your support will be 1100, then 1000, then 850 would be your next support. So good shot, 1250 plus with your stop loss. Okay, 2 weeks from now it's too late. So yeah, should have shorted it yesterday or day before, worst best case. I think so. Yeah. Huh? Or you can buy the 1200 put. Alright. Okay, so why I wanted to McDowell's, huh? What why is the gap? So that buyback. Alright. So given the election mode, I thought it would have gone up. Huh? Okay, so McDowell, I think the buyback thing. So the issue right now seems to be the window being closed. your window. So up to 2050, 2005, sorry, 2600 is where it has to come down to. It's 2768. So come down from there. The support is very significant at 2400, and after that it would go up again. So it's been consolidating for almost a year now. But I don't know how much upside is left now, because I think one of the things that's being supported by is this buyback story and takeover and all. There could be further selling that Vijay Mallya is supposed to do of this stock to cover his other liabilities and Kingfisher, defaults and this, that and all. So there could be some selling that happens at higher levels, remember that. But technically, the stock 2,400, great support, 2,600, that window will probably get closed, in my opinion. It's coming down with low volumes if there's any, issue. But yeah, 3,000 is your next logical resistance, but till that window closes, I wouldn't go long on. Say something wrong. Okay. So, yeah. So the reason I wanted to discuss Wipro in more detail is, let me make it simple, is this. Why did this fall happen in Wipro? So this is in early March 2003, it's about a year, about 12-15 months back, and you had this fall, and you had this demerger of Wipro's consumer products from Wipro itself, and they spun off a separate company, and then they gave options to the investors to either get bonds, either get cash, or get shares of the JD output company. Right now, the thing is, this was the first reaction to the demerger, which is now some part of the company is being spun off, and now this profit will not be part of this whole reporting that was there. Okay. But consider, look at what's happened. So if you have taken shares, you would be having shares of this demerged entity, plus you would still continue to have shares of Wipro. And what happened to shares of Wipro? From 450, it's now at 520. So not only do you have almost a 20% return on just holding Wipro shares, plus you have the shares of the baby company, remember that, which has a certain value. This is exactly what I'm talking about in IDFC 2 years from now. Okay, that's the reason I'm saying keep buying IDFC from now. Do an SIP. Forget about technical. Forget about fundamental. As a bank story, it's got a long way to go. Good. We don't know that. So first of all, it has to meet RBI criteria for fulfilling certain norms. So they have 18 months to do that. Then after that, okay. Yeah, its life high was somewhere at 770. It's still not yet done that. So the CNX IT index has done that. Okay. Any questions? So, huh? Something down the listed in India? Nothing here. Are we listed? EMG is not there. Huh? Procter & Gamble? Well, making life highs. Okay, so really uptrend is very much in place on Procter and Gamble, and will probably continue to make fresh highs in my opinion. It has to cross 3,500 on downside 3,000 to 3,050 is where you get support. I think we will just go up in the steps of 500 blocks to maybe 5,000 or more, maybe more. Don't know. And why the interest in that? In the well, BJP looks like Modi factor is helping him. So this is what politics is all about. Anyhow, the stock was 300, has fallen to 33, and now it is 69. Yeah, definitely. I mean, there's no doubt that it's whatever extreme trend line you want to put, it's broken out of that. See, this is the thing about technical analysis. Huh? Could be. Yeah, this is the thing about technical analysis. When did this breakout happen? August, September, sometime last year. Okay. When did the test happen? Jan, Feb this year. And at that time, it was on really good high volume then. Okay. So I'm just pointing it out to show you the effectiveness of TA. If you just follow this. And for those in the mentorship program, the proposal that was made, you want to go through and scan all the stocks. You'll find stuff like this. You will find stuff like this. You'll find something, this stock is broken out at, at 37 rupees, and then you put it on your watch list because it's a long-term multi-year breakout. You'll find it again at 32, 33, you buy it at 35, and it's looking at 70 bucks now, 100% return in about 3 months. Of course, this is not FNO, but what the hell? It's good enough, okay? But it will take a lot of effort, it will take a lot of follow-up, it will take a lot of tracking, and it will be tough to do it alone, but if collaboration happens, then that's the sort of stuff you are talking about. I mean, just to put things in perspective, if that sort of a systematic study was done, you would have found Tata Steel at 150 bucks lower. You would have found Hindalco at 40 bucks lower. Okay, you would have found this. You would have found all the PSU banks at not after the 60% run up, but after a 10% run up, 3-4 months back. Okay, if you added fundamentals, you would have found 5,500 was a great fundamental buy. Okay. So what I'm saying is, you're seeing evidence in the last just few weeks to 3-4 months, and you can go back and calculate what sort of returns you'll be looking at. So a good, systematic, but regular review, this is what you can get. So just throwing that out as an idea, especially to the mentorship folks, to see if you want to do anything with it, run around it, collaborate around it, and then see where that goes. Okay. Any other questions, thoughts? Nothing? You go there yourself. You're not going to sell Vascos, no? Okay. Going up. Talwar to it's a buy. Once 175 gets broken off, 200, 250 will definitely happen on Talwar. And you have a nice, really big head and shoulder here. Left shoulder, big head, right shoulder, actually head and shoulder inside a head and shoulder. So if you look at the measuring implications for Talwar, 166 to say 50 bucks. 220, 230 is the measuring implication for Talwar. So you got a head and shoulder here that you should track with nothing else. Okay. Might go sideways for some time, might come down because of election results. But once that is done, then this is a stock that should see 200, 220 plus. We are talking about almost 30-40% return from the current price. Alright, somebody wants to see TV 18. I don't know why I want to stop. I have done a breakout, no doubt about it. But the stock has come from 250 to 25. Okay, from 200 rupees to 25 rupees. So could go to 23, 22, and then after that, surely could definitely go up. Definitely now buying happening on higher volumes, there's no doubt about it. So yeah, if you have bought it at 200, I can only say sorry. But if you're buying it now, then it's possibly a good technical buy. Good. What is that? 75 last May. What is that? 75? Good. If you had held on, you would have lost a lot more money. So the importance of following trends and stuff like that, good evidence here. Okay, so you are making profit.
They came to there, that kind of a town and there, they could build that brand and everybody was there about doing the Right. It's the kind of town is there, I can't go there. There was there, they can, that's why it's not so
First of all, it's so hot. On top of that, people want to go to the gym there.
you have to do that. It's fashion, it's a brand building. People like materials to do the Dalwar and they would like to spend a team with your mind.
Huh? Correct. Okay. Yeah, so Talwar I'm sorry, what has gone from 400 to 800 in a month? Wow. Okay. So, definitely a lot of strength. Something is cooking in this stock, there's no doubt about it. The volume, I mean, it's the highest volume for years. This company was really distressed. They had a lot of debt. They sold off their work at hospitals, porters bought it, where is that and all, seems to have recovered and gotten out of its misery, and there is definitely some action happening. I mean, this is just mind-blowing stuff. It could cool off to, 620 levels, but then I think it's headed back to 1,000, 1,500. So, we are holding it. It's gone up really fast, very quickly. 100% in a month is like amazing stuff. I think in a day it did what, 20%? 450 to low 460, close at 550. 20%? It doesn't go. Yes, not always. Not always. Yeah. So that's why you should have a strategy for things like that. You pick up your first lot as soon as you see this, and then you need to have a stop loss in that first lot. If it loses your money, you won't lose much. You don't run behind and put all your money in it. Because there will be some which will cool off, some that don't cool off like this. Few don't cool off actually like this. Most do cool off. But then what happens when it runs away? When you're waiting, it's going. So that's it. Okay, so let's stop here. We'll do a quick review of the day and then we'll end. Right? So essentially, so you had Prashant's session. You had the fundamental review, then we did all the technical review. So for those of you who are really going to follow up on this, you need to go and make your list ready for 16, 17. So like I said, what are your stocks to follow under various scenarios as the results come in? Do you want to use the election as an event to trade, or do you want to just do you want it as a time to position your long-term money? These are all personal choices. You need to be clear about it and have some clarity on that. Okay.
On that day, or after the election?
I mean both. I mean you could look at it as a trading day. It is definitely it could be very volatile. There's no doubt about that. Okay. But as the day progresses and the results become, if some clarity happens, and if there is clear, I think 12 o'clock, 1 o'clock, it should be clear what's going to happen. And then you will see the market react to that. So, for all you know, you might actually see the market actually, what do you say, move significantly or not. I don't know. I'm just putting out various scenarios. The point being that you could see the market make a decisive move, and if you don't participate in the decisive move, you lose. Or you say, forget about this, let it settle down, let it take a few days, chances will always be there, and then you re-enter. So there's really no, what do you say, if you lose it? There's no, absolute one clear-cut answer to it. In retrospect, you'll always say, I should have done this, I should have done that, all that sort of stuff. But okay, so if there are any questions about today, feel free to ask. Go and review that FA stuff, especially from a longer-term perspective thing. And most importantly, if you are, the second session of this, so as of now, the idea is to have a half-day review, most probably on the 17th, after the elections are over, or it may happen on the 18th. So I'll confirm that. Yeah, so on 16th, at least for the mentorship guys, there will be the trading room. Okay, whether others want to be a part of it on that date, on the trading room, on the 16th, as the results are coming in, let me know. We'll have to work something out. So the second part of the series is to have that review session. One of the things is whether SEBI does that extended trading hours on Friday, and if they have trading on Saturday, depending on that, we'll finalize the dates. So there will definitely be a review session. Now the only question is whether that be a half-day review session or a full-day review based on SEBI things. So those of you who are coming for the SEBI session and second session, I think all of you are coming. We'll see how that goes. If there is going to be full day reviews, then I shall update you about time and date, etc. And there might be a small revision in the price, but that's something that we will update later. And the last thing will be on 23rd, once the markets have settled out, final LST. By the time everything will be clear cut, decided who is Prime Minister, who is probably the cabinet and all, and the life will go back to normal. Good. Any questions? I hope it was useful today. I'd like to have feedback, what worked, what didn't work, what you thought should have been better, not better, etc. I get hopeless feedback, so I don't know what to. There has been no feedback. Okay. So I don't know what you guys are looking for, what you found enjoyable and what you did not. So yeah, so spend some time, either write in a mail or call up and let me know. Right. Good. Good. I'm happy. Okay, so good.